Here are your headlines. Growth concerns snap the 7-day winning streak for US stocks and send the 10-year yield to its lowest in 4 months. Investors now await Fed minutes. Progress on oil. The US cites positive signals after high-level talks with OPEC+. Brent slides the most since April. And regulators in Beijing are planning rule changes that would block Chinese companies from listing overseas. That is according to Bloomberg reporting. Good morning, everybody. Just 20 seconds to go until the start of cash equities trading then here on the European equity markets. And we've seen a bit of recovery in these futures markets over the last half hour or so, pointing to the upside. European markets suffered some losses yesterday, and so a little bit of a rebound expected in today's session. So we are expecting to see things a little stronger. European equity market futures could be up by around 0.5%. Euro Stoxx 50 futures certainly up by around that amount. Let's have a look at where we're starting then this European equity trading session. And we did see some risk aversion in yesterday's session. We saw concerns around that higher oil price quickly dropping on the growth concerns that it triggered, and also on messaging from the US that suggested maybe a resolution. The Saudis and the UAE might be able to resolve their differences. So we saw that drop in energy prices. We've seen yields on the US 10-year.
Good morning, everybody. As you remember, yesterday we sold short Bitcoin and we placed stop on profit at 34,000 to 34. We successfully closed position overnight. Well done. So I will calculate all, basically it's calculated. I will show all the information and for newbies, people will see when we sold short and when overnight position was closed. Let me show you, and you will see it was 34,000 to 34. We closed position. We have, let me change to probably about 10, let's put 1 hour. It's too much, 10 minutes. Let's see, 10 minutes, it will be 34 to 34. 34 to 34. It was somewhere here. We sold. So it was about 1 o'clock, as you can see. 1 o'clock in the morning, we sold position. Our positions for newbies, for new people, you can see from our ticker, and you can see we sold short at 34,406. We sold short, and we opened position 34,406. Just right here. So position was opened at 1 o'clock and was sold at 1 o'clock afternoon and was sold at 1 o'clock in the morning. Well done, guys. If you will calculate all profit for yourself, it's all about how much you pay per pip. We pay, excuse me, with Bitcoin, we paid based on percentage because Bitcoin kind of volatile. We're not making money based on pips. We make money based on percentage. So 1% will give us £1,000. So you can calculate and you will see how much we made. In your case, how much you decided to invest when you decided to trade Bitcoin. Well done, guys. Let's move on. It was a good start. And let's see what other pairs, what other securities will give us a profit for today. Okay, guys, for strategy, if you would like to get the strategy, you can go to company.co.uk. You also can pay by Bitcoin. We have new payment system and we accept Bitcoin as well. So you're welcome to check our website, webinars and strategy on company.co.uk. Stay safe.
Wrong positioned.
Okay, and why do you think then that inflation won't be long lasting, won't stay around? Because some people point to the higher oil prices that we've seen in recent weeks and say this is another reason to be nervous about higher inflation, and that inflation might be sticky. It might not disappear quickly.
If we see oil price and the move on oil price, I would say we are coming from a very low level. That drives inflation, short-term inflation, is for me absolutely clear. But I would say the long-term inflation is a different picture here. I see not that the oil price will go far away about that level at the moment, maybe for a short time, but I don't believe for a longer time about that thing. The other thing in inflation is that in the most of the country, especially in Europe, the oil price, the consumer pays, is more driven by taxes, by other things, as by the oil price still alone. And what I see at the moment, especially with the energy prices, that's now coming in. But if we compare that with next year inflation, that will be flat, because I don't believe that oil price will go much higher as at the moment. And then I would say the things leveled out. By the way, Allianz Global Investments believe that a stronger growth in inflation coming out of the raw materials, but I cannot see that at the moment.
All right, so that's the inflation story. You mentioned earlier you like value, Jörg. Is now a good time to be buying value stocks? You've talked about the link between interest rates, the conversation about how high yields go, and banks and insurance companies. Do you want to be buying banks and insurance companies expecting higher yields at this point?
Yeah, now it's again, I'm not expecting higher yields. The market expects higher yields. So I'm on the wrong side here, no question about that things. But if I see what banks, especially in Europe, and insurance companies are able to pay on dividend, on income in the next time, I would say they are absolutely undervalued at the moment. The people look only for growth. They look only at the moment for companies they are able to grow, not even profit, to grow revenues about that things, and pay a huge amount of money for that things. The valuation in the growth sector, in my opinion, is more an issue as talking about interest rates in value stocks, especially in Europe, where I don't see interest rates rising at the moment. And then we have only the discussion of is good, but we have the discussion about rising rates out of the United States. And there we have now to see how the Delta variant, how the inflation, how all the other things are now coming into the system, and how the Fed will react on that things. Yes, they have to go up with the interest rates. But I would say some people believe that will be too much, I would say too fast. And I would say if I see the economic situation, if I see that some of the people believe that Q2 was in the United States already the top of the reopening trade about the things, then I'm not sure that the Fed can directly go over to higher interest rates.
Jörg, thank you very much. Stay with us. Jörg de Vries Hippen, Allianz Global Investors CIO for European equities. Do stay with us a little bit longer on the European market open. We want to get Jörg's thoughts on the car sector, amongst other things. And we've got some news coming out of BMW this morning, talking of the car sector. Q2, second quarter unit sales rising by 45% year on year over at BMW. The recovery in Europe and the recovery in the United States helping to drive those figures higher. The microchip situation, this is interesting, may impact sales for the rest of the year. So this is not going away in a hurry, this issue with the supply chain for microchips, and cars take increasing numbers of microchips, it seems. Deliveries of electrified vehicles, so EVs, more than doubled in the first half. We'll keep a track of the BMW story, and we'll get the thoughts of Jörg on the chip sector and the auto sector next. BMW takes the lead in the US luxury car sales. That's as a global chip shortage hampers vehicle manufacturing. We'll take a look at that story next. This is Bloomberg. Microchips, it seems. Deliveries of electrified vehicles, so Welcome back to the European Market Open. 11 minutes into Wednesday's trading session, which is broadly positive for European equity markets. The DAX up by 0.7%. And let's think about what's going on in Germany. BMW's US luxury sales, it is German listed, of course, blew past rivals in the second quarter. The car maker did a better job of stocking dealerships with new vehicles in spite of a global semiconductor shortage. And we've just heard from BMW this morning that they do expect that semiconductor shortage is going to impact on the business into the second half of the year. So the microchip situation may impact sales for the rest of the year, according to BMW. Let's get the thoughts of Jörg de Vries Hippen, Allianz Global Investors CIO for European Equities. Jörg, how much do you think that the shortage of chips is damaging the auto sector, damaging its ability to keep up with demand?
We can't directly see that will damaging at the moment. Due to I would say it's not. If I see at the moment, there's not a shortage, in my opinion, about semiconductors. It's the shortage of the semiconductors the car manufacturers use. These old technology, that mature technology that is used at the moment in industrial companies instead of the very thin new technology. And I would say semiconductor industry invests a lot of money in new capacity, but even not in the old capacity where the people ask at the moment. A car has today much more semiconductors, and that means that the shortage is even bigger about the things. That will stay for longer, and that will not even stay for longer for the car manufacturers. I would say that is an industrial-wide issue at the moment. And I would say the car manufacturers and other companies has now to react on that things and find maybe different ways or find different ships to handle the things. That needs maybe 6 months, and then that should be solved. But I would say that will stay for longer. That will be an issue, and especially for cars produced in Germany with a lot of technology with a lot of semiconductors, even in seats and other things. It's for sure that will give the auto manufacturer some headache.
Yes. Where do you think car manufacturers, auto manufacturers, Jörg, are going to make their money in the future? Clearly, we're seeing a pivot away from combustion engines towards electric vehicles, but many people talking about the amount of money they might or might not, depending on regulations, be able to make out of the data that they collect. There are now going to be so many chips in cars, they will be collecting a lot of data, perhaps, these car companies. What will make companies in this sector profitable in the future?
Services, you're absolutely right. And I would say it starts already who owns the car. And I would say there's a lot of models. All big car manufacturers try to have different models in the things, from renting cars with other services. The data is the biggest thing at the moment. Financing cars, all the things is a different thing. If we see at the moment the balance sheets of car manufacturers, the biggest part of the balance sheet is the financing of the cars. And with these things, I would say the most of the companies are doing already a good part, even the biggest part of the profits out of the financing of these cars. The same thing will now happen with the data. If they understood better to manage the data, if they understood better to build out of the data more services for the clients, they will earn money with the things. But first of all, especially the European car manufacturers has to understand to make the software out of one hand. And companies like Daimler, like Volkswagen has announced that they could produce their own software and that they now start with the software instead of the car.
Jörg, thank you very much. Really interesting conversation. Jörg de Vries Hippen, Allianz Global Investors, CIO for European Equities. Jörg will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. I'll be there at 9. Coming up on this programme, we talk green bonds and sustainable finance with the European Commissioner for Financial Services, Mairead McGuinness, will be with us. That conversation next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the European Market Open. 18 minutes past 8 here in London. European equity market trading to the upside. Now, the European Union has proposed a whole slew of new rules to bring the world of finance into line with its ambitious goals to make the bloc carbon neutral by 2050. It also set out its green bond standard, a voluntary rulebook that issuers of sustainable debt will have to follow if it wants the EU stamp of approval. For more, let's get to our Brussels correspondent, Maria Tadeo, who joins us now with an important voice on the subject. Maria.
Yes, Anna, good morning. Let's go straight with our guest. She is Meredith McGuinness, the Commissioner for Financial Services of the EU. And Commissioner, thank you so much for taking the time to do this interview. There's a lot to unpack because yesterday you put out, as Anna mentioned, that sustainable finance rule book that you're hoping to be able to implement. And I have a question specifically for the banks here. You know, you say you want to get the credit for sustainable projects going and make that quickly. So I wonder, in terms of the capital requirements, would you make that count differently if you're lending to support a green project?
Well, good morning, and thank you for having me. We had yesterday the unveiling of this strategy and also, as you say, the European Green Bond Standard. But to your specific point about banks, one of the things that we know for sure is that climate change is a financial stability risk. So there are implications for our financial system if we ignore action on climate change. And we have asked the European Banking Authority to report to us on this issue. And indeed, their report them to escalate their work and have some information for us by 2023. I think globally, but certainly in the European Union, where we have led on this issue of sustainable finance, there is now a realization happening very fast. We have set very ambitious targets in Europe to reduce emissions by 55% by 2030. But to do that, we need money. I've used the quote of that song that money, but it also has the capacity to, if it's not invested correctly and in the right projects. And what we've been doing, not just yesterday but previously, is to try and reorientate our financial system to think about long-term, to think about sustainable investments, and equally to think about the risks, because already there is investments in technologies that will become stranded assets. So one of my titles in that long one is financial stability, and the core of our work is to ensure that we have financial stability and that we take account of climate. And maybe to say that this pandemic has surely shown the financial world and the corporate world that issues like public health matter to them, and where we have a pandemic, it impacts not just the financial system but the whole economy, and therefore we need a more holistic approach to how we move forward in the future.
Right, and Commissioner, when you look at that global green bond and that global standard that you're hoping for, and you're hoping will be able to attract money and avoid greenwashing, that's a first, but it's also voluntary. You don't have to provide that information. Are you confident that companies and the issuers are going to play ball on this?
Well, I look again on our green bond standard. This is about raising the bar. We're building on existing standards, but we're saying that, look, the future will demand more. So we yesterday in the college, we approved this regulation. It will go to our colleagues here in the European Parliament and the Council, and we are confident that a voluntary standard is better because there are choices and companies and others can make choices about what they want to do. But clearly with our transparency initiatives around reporting, not just by corporates around sustainability, but also the financial system itself, there will be, if you like, even though it's voluntary, I think there will be an impetus on the system to use these very high standards in the bonds market. But I think we have to be realistic here. There's a huge amount of talk, as we are this morning, on sustainable finance, but look at the very small percentage of green bonds that are actually issued. I think it's less than 4%, and I think I'm being generous. So really we have a lot of work to do in that space. And one of the dangers is that if there are many different standards and, you know, companies don't know how to choose or to choose one between another. So we want clarity of information. We want also that this European gold standard, if you like, is supervised by ESMA. There will be people who will go in and check that what the issuer said will be delivered on in terms of sustainability. And look, I mean, sometimes this is complicated because we have to go through many pieces of legislation. But at the heart of it, it is a very simple fact that we need massive amounts of private investment to turn our world in a sustainable direction. Public funding is there, of course, but it's not going to be enough. And I think, you know, I'm happy to see that now investors, large and small, are saying, look, we also want to invest in what is sustainable. So we're on a journey here, but we actually know that the time is very short. So yesterday's approval here is a very significant step for us in the European Commission and in the European Union. And we also want to work globally. That was one key part of our work yesterday. 4 pillars, but the global dimension is key.
And Commissioner, you know, you say the amounts will matter going forward. If you look at the issuance that we need to see from the EU, we're looking at 150 billion euros from next year until 2026. 30% of that will have to be green, but you're also competing to some extent with the national treasuries that also want to issue green debt. So I wonder, do you fear perhaps that the market is A, becoming overcrowded, and 2, that perhaps you're not going to find the projects that you need to deploy that money?
No, I don't have that fear. Actually, my real fear would be that people would turn away and ignore what we're saying and what we're doing. And I think that will be fatal, not just for our economy, which is important, but for society and for the whole global dimension. So I'm very clear about this. The amount of green bonds that are issued is very small. I don't have the concern you've expressed about competition. We want in our next generation EU that governments in their, you know, strategic plans as to how they will invest this money, that they look towards both digital and green agenda here. So there's a lot of, I think, good forces working towards sustainable. The transition is SMEs, and I made a core point about SMEs yesterday as I discussed it with the press, that SMEs tend to be fearful of these changes. They're coping with COVID, the recovery and more. And I'm saying to SMEs, look, you should really view our taxonomy, our work on sustainability as a management plan for your long-term future rather than see it as something to be fearful of. And indeed, the biggest fear I would have is that SMEs would not engage. So we're working very hard with our very strong SME community, and they are on board, and we will work with them to make sure that they benefit from sustainable finance.
Well, Commissioner, thank you so much. And you make it very clear that the EU really wants to dominate this market. ESG, we've seen a lot of money moving into that. And as you mentioned, a lot of this denominated in euros. Commissioner, thank you so much for joining us on Bloomberg. As always, we appreciate your time. Anna?
Maria, thanks very much. Maria today bringing us that important conversation out of Brussels. We will see the UK government issuing its first green gilts, but not till September. We'll continue to track that story here in London as well. Now, coming up on the programme, regulators in Beijing are planning rule changes that would block Chinese companies from listing overseas. This is according to our Bloomberg reporting. We'll get the latest from China next here on this programme. And this comes after the crackdown on Didi. Of course, it listed at the end of last week, and then it faced a quick clampdown from Chinese authorities concerned about where the data that Didi, the ride-hailing app, where that data goes. We'll talk about that next. This is Bloomberg.
delayed 4 more weeks. That's the delay expected to be added to the lifting of all lockdown restrictions in the UK. It had been due to happen on June 21st, but UK Prime Minister Boris Johnson to address the nation later today and to push that date into July. It's all down to a surge in the Delta variant, and government ministers thought to want more people to have their second COVID vaccine before they ease all restrictions. How are markets responding? Well, they're largely taking it in their stride. The FTSE 100 actually gaining ground. Strategists saying that delay largely priced in, that we could see further weakness for travel and leisure and hospitality stocks. The pound falling against the dollar, though Nomura saying this weakness likely to be temporary. In fact, money markets largely bullish on sterling, given the pace at which economic gloom has been lifting here in the UK. Indeed, last week's GDP figures pointed to an economy that is recovering quickly, and later this week we'll get unemployment, inflation and retail sales data that should all further illuminate the economic recovery.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour into our European trading session, and increasingly positive across European equity markets, up around 0.6%. In particular, the Xetra DAX getting a boost, up by 0.9%. Perhaps it is a rebound in autos and auto parts that helps the German market. Let's have a look at that sector breakdown, and you'll see autos is one of the stocks or one of the sectors moving higher. Most sectors in positive territory. It's not the biggest gaining sector because that crown falls to basic resources and energy stocks, given the well, we've seen a lot of volatility, certainly in oil prices over the last couple of days, went as high as $77 a barrel, of course, on Brent, now back down to something with a 75 handle, but still making some moves to the upside compared to the previous close. Basic resources may be responding also to higher commodity prices. To the downside, travel and leisure under pressure, that sector to the downside. Let's have a look at some of the stocks that are on the move this morning. Some really interesting stories out there. Shell is one of those. Plans to increase its level of distribution to shareholders, so giving us some new stats on the percentage of their cash that they will be giving out to shareholders, and so that pushing that energy business up by more than 3% as we see them try to energy transition. The Nordic Entertainment Group is also in focus today. They've won Premier League rights in several markets, over in certain Eastern European markets, Baltic countries, so this adding to the list of countries where this particular business is able to broadcast those Premier League football or soccer games. So that stock up by 4.5%. Let's also talk about SAP in the tech space here in Europe. According to analysts over at Bank of America, the momentum of SAP's cloud business is set to accelerate, and this will help to change the perception of this stock, which has lagged, they say, behind other EU tech names. So they double upgrade that particular stock, up by 2.8% as a result in session today. Let's get a Bloomberg First Word News update. Here with the details is Laura.
Thanks, Anna. Bloomberg's been told Russian government-backed hackers breached the computer systems of the Republican National Committee last week. Sources say they were part of a group known as APT-29, or Cozy Bear, which has been tied to the Kremlin's Foreign Intelligence Service. An RNC spokesman denied its systems were breached or any information stolen. Italy will play in Sunday's final of the Euro 2020 Championship after beating Spain at Wembley last night in an enthralling semi-final. Roberto Mancini's Italy won 4-2 on penalties to continue their run of wins, now at 13 games. Fears of a half-empty stadium in London proved unfounded, with supporters from both sides snapping up tickets. Wembley is likely to be even noisier this evening as England play Denmark, hoping to secure a place in a first major tournament final since 1966. Chinese Premier Li is calling for deeper cooperation with the UK to help boost relations between the two nations as political tensions simmer. At a virtual meeting with more than 30 British business leaders, Li pledged that China will continue to open up its economy to the world and treat foreign companies equally. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura writes here in London then. Now, regulators in Beijing are planning rule changes that would allow them to block a Chinese company from listing overseas, even if the unit selling shares is incorporated outside China, closing a loophole long used by the country's technology giants. This, according to our reporting here at Bloomberg. Joining us now from Beijing is our executive editor for Greater China, John Liu. John, really good to speak to you. And this is quite technical in some of the details, but maybe the direction of travel is clear. Give us the specifics here. What have we learned? What is the change that is afoot?
I think the key phrase there is closing a loophole. So for ages, for more than a decade, Chinese tech companies, Alibaba, for example, they listed in the U.S. by using what's called a variable interest entity. So they set up a company in the Cayman Islands or the British Virgin Islands, and then that company was what listed, not the Chinese company that owned the assets here in China. And so in the old days, the government in Beijing had no way to regulate that listed entity. Now the government here is making changes that would force these companies, before they could do that listing through a vehicle registered somewhere outside China, they would force them to seek approval from the Chinese government. So in this past week, we've seen the turmoil with Didi. So in that example, Didi would have had to show the Chinese authorities that they met all the requirements relative to their data security before they could have gotten approval to list in the U.S.
And is this part of, John, a wider decoupling of two financial systems? Is that the sort of broader narrative that we should attach to this story?
I think that is part of it. I think at the heart of this is how important data has become to the economy at large, and how both the U.S. and China are coming to a greater realization of that. And both governments, especially with tensions running so high between them, are looking for ways to better secure their own data. So you have the U.S. Doing this review of companies like TikTok and whether their operations in America are exposing American data for American citizens to the Chinese government. And China's doing the same with Didi, essentially.
And so is this driven then, so that's interesting, is this driven by a concern about what companies will do with the data or where the data will go? Or is this driven by geopolitics, or perhaps, as you suggest, John, the two are linked?
I think the two are linked. I think right now, technology and who controls the innovations of the future, be it 5G, be it AI, be it semiconductors, that's sort of really at the heart of this competition between the U.S. and China. And data, especially for AI, is a huge component of that, and will determine in large part who will succeed in that race. And so I think both governments right now, what you're seeing, are trying to get a stronger grapple hold over what they can do in terms of their own data.
Where does this story go next then, John? I mean, clearly Didi was the big example of the controversy caused by this just at the beginning of this week. Are we going to see listings being pulled, Chinese companies not able to list in the United States? Is that going to be the next part of this, Chinese companies deciding to list at home instead? Is that where this goes?
So the revision to these rules don't mean that necessarily companies will not be able to list, but it will make it substantially more difficult, because now those companies will have to meet the requirements of the Chinese government. So I think what we will probably see is a lot fewer Chinese names seeking a listing in New York, and potentially more doing that instead in Shanghai and Hong Kong.
Okay, interesting stuff. Thanks so much for bringing us the story. Our executive editor for Greater China, John Liu. Coming up on this program, South Asia's largest higher education tech firm, Upgrad, announces new plans for expansion. Those expansion plans, they feature Europe. We speak to the company's co-founder and chairman. He's going to be joining us next. Ronnie Screwvala will be here on this program, The European Market Open. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
I think now as the economy reopens here, I think the shortage in housing will become more acute. And so we continue to like it as a sector to invest in.
Blackstone President and COO John Gray there giving us his take on the booming property market. You can hear more from him on that and plenty more on the first episode of Bloomberg Wealth with David Rubenstein. That is tonight at 7 p.m. London time. Let's get a Bloomberg Business Flash, the top corporate stories we're covering here this morning. Here's Laura.
Thanks, Anna. The Pentagon has scrapped a $10 billion cloud computing deal with Microsoft after several years of wrangling, with plans to divide the work between Microsoft and rival Amazon instead. Amazon had argued in court that political interference from former President Donald Trump had cost the company the lucrative cloud contract. Nomura is axing cash prime brokerage services in the US and Europe as it grapples with big losses from the Archegos capital collapse. Sources say the Japanese bank has already informed some regulators and clients about the decision. Nomura lost almost $3 billion when Archegos unraveled. XPeng fluctuated in its Hong Kong trading debut after becoming the first Chinese electric vehicle maker to finish a so-called homecoming share sale, raising $1.8 billion. The company went public in the US last August, with its New York-listed shares almost tripling from their IPO price.
I think as a China consumer brand, I think we want to have our customers ultimately be our shareholders as well. So coming to Hong Kong gives an opportunity to achieve that goal.
Samsung has reported better than expected profit as memory prices and shipments rose on strong server demand. The company said the earnings reflected a one-time gain related to its display business. Analysts say this is a likely payment from Apple for failing to meet contract requirement for the supply of screens after iPhone mini sales came in lower than expected. Shell is to boost returns to investors later this month as its core businesses get stronger due to a recovery in energy demand and rising prices. The Anglo-Dutch oil giant says it will raise total distributions to shareholders to between 20% and 30% of cash flow from its operations. It didn't specify whether this would be through dividends or share buybacks. That's the Bloomberg Business Flash. Anna.
Laura, thank you very much. Laura Wright here in London with your Bloomberg Business Flash. Now, South Asia's largest higher education tech firm, Upgrad, has just announced ambitious new plans for expansion. The company has earmarked $250 million for mergers and acquisitions over the next 9 months, with a big focus on growth across Europe. The Upgrad co-founder and chairman, Ronnie Screwvala, joins us now. Ronnie, very nice to have you on the program. So you want to grow across Europe. Why Europe, and how do you plan to grow here?
You know, I think overall education, which was an event, now is pretty much lifelong learning. And I think it's crossed boundaries. Brick and mortar learning in education was always an inclusive process. And I think online learning, which has really captured the world overall, is now something that is much more inclusive. So I think geography and boundaries have been pretty much collapsed in whatever we normally do. And I think, therefore, for us, it's a very diverse market. The United Kingdom, of course, is a major thrust area for us, but even other parts of the EU, going all the way down to the Middle East. Primarily, these are careers of tomorrow. So data, digital marketing, machine learning, artificial intelligence on one side, and how MBAs and management degrees have been sort of redefined on the other side. The scope is incredible, and I think, therefore, these are very strong markets for our growth.
Okay, so you want to grow into Europe, and that's the reasoning as to why. You've earmarked $250 million to do this. I think you recently raised around $160 million from Temasek and other sources. Are you going to need to raise more money then to go on this shopping spree around Europe?
Well, I wouldn't call it a shopping spree. I think it's going to be a much more strategic benefits and strategic acquisitions. I think fund flow, it's a combination of cash and stock. And I think we have a very valuable company here. And I think it'll be a combination of cash and stock. But at the right time, if we need to raise further money to digest the acquisitions, that's what we would do.
So are you talking to Temasek and others about putting more money in?
I think the strong inward bound interest. I think India is a hot destination outside of the US and maybe to a sole exception of China for EdTech. It's a phenomenally large market. So we're constantly dealing with inward interest. And I think to that extent, a fundraise would be the next thing to go. But I think the two are not linked. We are between our currency and our value and the money that we've raised good for our acquisitions for now.
Okay, so you're good for now. Let me ask you a little more then about what it is you're going to be looking for in Europe. You've talked about the UK market. Which types of assets might catch your eye, Ronnie?
So, you know, the broad segment of everything above K-12, which is really the young graduates to the working professionals. And I think the key part today for all markets, and especially after the pandemic, is how do you remain in the top 30% of your company? Which really means that you need to upgrade yourself, either specialize or do whatever. So whether it is the short form learning courses or the deep learning courses, or the element of actually universities that are much more digital and online, to the entire ecosystem that I think is going to be very, very large very soon, which is the area of mentoring and coaching, digital mentoring and coaching around the world. So these are the four opportunities we've kind of outlined for what we would want to do both organically and inorganically, both in Europe, the US, and other parts.
Yeah, I was going to ask you about organic and inorganic growth, because the focus on your press release today is very much around M&A. But from what you've talked about and the growth you've achieved already in India, I wonder whether you just grow organically in parts of Europe as well. And to your point earlier about boundaries having come down between markets when it comes to education, are there organic opportunities then for your business in Europe?
I believe so. I'm a first-generation entrepreneur, and I believe actually there's been an incredible amount of growth in the edtech sector in the last 5 years. So our structure is ready to bring in very like-minded entrepreneurs and founders to actually look at the whole being bigger than the sum of the parts. That's our approach to sort of M&As. And therefore, I think in some of the countries like Africa and India and Asia, we look at much more organic. But in the US and in the UK and in Europe, we look at much more inorganic.
And there are going to be a lot of businesses, well, some of them you might look to buy, but some of them you might end up competing with. What excites you that already exists in the European edtech space?
No, I think the diversity of that. I think the context that they're all early stage is what actually strikes me as being very remarkable. Because if you take the brick and mortar part out, the entire element of working professionals needing to now look at things every 4 to 5 years to upgrade themselves, upskill themselves is going to be the critical one. And my personal soft spot is also one which is soft skills. And I think that's something that worldwide is going to gather a lot more momentum. But I think marketplaces for mentorship and coaching is something that we're really very excited about. And I think it's a very universal context where phenomenal coaches from one part of the world can actually be mentoring people across in a very, very high technology space.
Ronnie, thanks for giving us your time. Really good to speak to you. Thanks for joining us on the European Market Open. Upgrad's co-founder and chairman, Ronnie Screwvala, joining us there about the company's planned expansion into Europe. Coming up here on this program, then, we'll be back to the markets. We'll take a look at the next catalyst for markets, which could come from US data and FOMC minutes, of course, due out later today. We'll discuss that next with the Markets Live team. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Premise seems to be that regulation's bad for crypto or it's scary for crypto. Truth is, we're in a transition point where the number of people participating in this market has gotten so big that you need basic frameworks. And that's actually a sign of the maturity and the growth of the market more than it is a sign of something bad.
That was the Binance US CEO, Brian Brooks, discussing regulatory concerns about cryptocurrencies across the world, an ongoing theme. No doubt we will return to that. Let's get to the market action, though, this morning. And we're 51 minutes into our European trading session. And European equity markets making decent gains, moving to the upside by 0.6% right now. From our Markets Live team, Bloomberg macro strategist Laura Cooper joins us this morning. Laura, good morning once again. So this rally that we're seeing in European equity markets, a bit of a rebound, though, from losses of yesterday. What do you think's provoked the sort of risk-off to risk-on pivot that we see in Europe?
Well, I think that is the case, just the fact that we are seeing European stocks catch up from that downbeat, from that upbeat day that we saw in the latter part of the U.S. session. And I think it's interesting to note, like, what was the catalyst for that? We don't really know. Could it potentially be oil prices tumbling? Unlikely. I think potentially it's just a case of, you know, stocks just taking a breath before they extend their climb higher.
Yeah, indeed. And what role is the big move that we've seen in Treasury markets playing here? Because US Treasury markets yesterday saw a substantial move to the upside, yields coming much lower, 1.33%, which seems to sit oddly with the fact that we've spent a lot of the first half of this year thinking about inflation and inflation fears. You have to wonder, I suppose, what the positioning's like in the Treasury market at this point.
Oh, certainly, and I do think that some unwinding of those short Treasury bets was potentially part of the move that we saw yesterday. And I do think that that global bond rally really did spark that risk-off session. But again, it's a case of why did we see bonds rally as much as they did? So yes, I think positioning was certainly a component of that. Are we seeing signs of peak U.S. growth being priced in? We did have that ISM services print that did come under pressure. We did see employment contract, which was unexpected. And then, of course, when we just look at what's happening with the Delta variant, I think we are beginning to see investors reprice the fact that we could potentially see renewed lockdowns. Because when we look at Israel, for example, the fact that about 64% are protected against the variant under vaccinations, and that compares to about 94% back in early June. So we are seeing just this deterioration on vaccine efficacy, which I think, is challenging investors' complacency about the virus.
Right, especially with stocks at such elevated levels and then clearly having an impact on fixed income markets as well. Let me ask you then about the Fed minutes, because I was wondering this weekend, Laura, just what can we learn about the Fed conversation from these minutes? We saw such a big move, a big change in expectations and some big moves in the curve in the US Treasury markets as a result of the outcome of the June meeting. Now we're going to get the minutes, but we've heard so much from Fed officials in the meantime. I wonder if there'll be anything new, whether it might seem outdated. What are you going to be looking for?
Well, that's a good question, because yes, we did see that exceptionally hawkish surprise move by the Fed with those dot plots being, those hikes priced in for 2022. But I think the fact that we are seeing this growing divergence of FOMC members about that tapering timeline, it will really be about the details. How are they looking at that labor market recovery? What prompted them to pull forward those rate hikes? And so any signs that are potentially hawkish, I would expect to spark a knee-jerk reaction in the markets, notably in the dollar, notably, potentially in yields. But certainly, I do think it's a catalyst for the day ahead.
Laura, thank you very much. Laura Cooper, Bloomberg Markets Live macro strategist, joining us with thoughts about the day ahead. We're certainly going to get those Fed minutes, the FOMC minutes. We'll look for that. We'll also look for the JOLTS data, as she was mentioning, and also Mark was mentioning a little earlier on today. So plenty of data out stateside, and it was data, US services data, that may be added to the wobbles created by higher oil prices in yesterday's session in the United States. So we'll certainly keep an eye on all of the data prints coming from the US. The Fed, of course, is very data-driven, as they like to tell us. Let me just tell you what's going on with Wise. This was a company that was maybe better known as TransferWise many moons ago. Well, now coming to the market in a direct listing as Wise LN. We've seen the opening auction take place. The early auction yielded some bids that ranged from 100 pence to 1,000 pence, but then we get to a theoretical auction price from that of 750 pence in the London market. That would give Wise a market capitalisation as high as almost £7.5 billion. That would be more than the $5 billion valuation in a July 2020 fundraising. So perhaps that would meet with some high expectations. But we'll continue to focus on this. We've had this auction process taking place, but I think 11 a.m. London time is when we get it then fully start to trade. But taking a rather different approach, a direct listing here in London, which is a bit of a first for a European tech company to do that here in Europe, something we've seen happening in the United States often, of course. That is it for the European Market Open. Surveillance early edition is up next. They'll keep an eye on these markets for you, these moves to the upside, unwinding some of the losses of yesterday here for European stocks. This is Bloomberg.
premise seems to be that regulation's bad for crypto or it's scary for crypto. Truth is, we're in a transition point.
We need to enable all countries to step up development cooperation with shared benefits by all.
By the end of this week, we'll have reached the mark of 160 million fully vaccinated Americans.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Closing the loophole, Chinese regulators plan rule changes allowing them to block domestic companies from listing overseas. The country's tech shares sink. Growth concerns. U.S. yields hit their lowest in 4 months, and stocks snap a 7-day winning streak as traders turn wary of the impact of the Delta variant. Fed minutes are due later today. And Bloomberg has learned that Russian government hackers known as Cozy Bear breached the computer systems of the Republican National Committee last week, while the RNC says no data was stolen. So let's get straight to our top story. And Chinese regulators are planning rule changes that would allow them to block a Chinese company from listing overseas. That could be even if the unit selling shares is incorporated outside China. Now, it's the first indication of what Beijing will implement a new tech crackdown announced yesterday. The move is rippling through markets. Now, the Hang Seng Tech Index has been hit hard by the industry crackdown, slumping more than 30% since its February high. Well, joining us now is Bloomberg's executive editor for Greater China, John Liu. John, thank you so much for joining us. I mean, this is a massive deal, and every day it seems to be getting worse, I guess, for Chinese companies. Can they survive, or can they grow as much without listing overseas?
I think the point of these changes in regulation is not to kill or to totally undermine China's tech industry. It's in Beijing's interest to have a vibrant, innovative tech industry, especially with tensions the way they're running with the U.S. China needs new inventions, new technologies, 5G, AI, semiconductors, and it's only going to have that if companies such as Didi have some sort of access to fundraising. I think what we're seeing now is the government wanting to make sure it has enough control over what those companies do with their data, what they do with their businesses, what they do in terms of sharing with other governments.
So do they just need to get approval, John, first, then before they, list overseas? Like, how much more will we know about the details of what can be listed, what can't be listed, and also the relationship that the authorities have with some of these big tech giants in China?
So I think we're moving from a world in which there was little to no regulation of how Chinese companies listed overseas into one where there is substantial regulation. And so I think that doesn't preclude Chinese companies from listing in the U.S. It will, though, necessarily make it much harder. And it will be harder because those companies will now have to make sure they meet Beijing's requirements. So in the example of Didi, it would seem that if they had been operating under this new regime, they would have had to show Beijing that they met the needs for data security before they could have listed in the U.S. And so I think the net result is you'll see more Chinese names listing in Shanghai and Hong Kong instead.
So, John, this is basically, additional oversight from Chinese authorities on some of the tech companies. But what exactly is their biggest concern here? As you say, they do want, a vibrant kind of technology-driven economy as well.
So I think data is really at the heart of a lot of this tension, a lot of what's happening now. You have the U.S. and China both realizing how important data is for the economy at large and realizing that they don't really have a good grasp over who has access to data from their countries. So you have Washington doing this review of companies like TikTok, whether those operations in America are exposing the data of American citizens to the Chinese government. And now you have China trying to find out if the data that Didi has on where people are traveling day in and day out in places like Beijing and Shanghai, if that's going to be accessible by people in the U.S., by the U.S. government potentially.
Thank you so much. Bloomberg's executive editor for Greater China there, John Liu, with the very latest on this story. Now, joining us to talk about China, to talk about the world economy, is Christian Keller. He's head of economics research at Barclays. Christian, great to have you on the program. Thank you so much for coming on. We were just speaking with our editor of Greater China to try and figure out exactly what the end game for these technology companies in China was. Is there a read across into your world of economics? Does it mean that actually the relationship between the U.S. and China could be even more fraught?
I
think the market has to deal with the fact that, probably as early as 2018 was when Trump, started the so-called trade war with China. The relationship now in the next decade or so will be different than it was in the last 10, 20 years. So that's, I think, something the market has already realized. And what we see now, I think that has been accelerated probably with COVID. Both the US and China, and by the way, Europe as well. Everyone seems to be trying to get more control around, foreign investments, more control about what companies do, and in particular, of course, data, all digital companies, everything that has to do with data. I think there's the desire to gain more control. At the same time, I think everyone still wants growth, and everyone knows that this sector is important and needs finance. So I think what, your previous speaker said makes a lot of sense, that there's a desire for more control, but it's unlikely that governments will go as far as really starve these sectors, from financing. So it's probably a lot of posturing. In the end, there's a strong interest on all sides really to continue to have this sector develop.
Christian, does it change in any way? I don't know if it's your forecast on China or actually how you view some of the policy decisions in China. So we had some PMIs that were not as good as expected. We see also a crackdown and concerns about defaults in China.
I think independently of what we saw today about the latest policy actions, what we do see is in China, if you want a carefully engineered slowdown, and China obviously came out of this entire pandemic much earlier, much stronger and better than the rest of the world. They have a credit cycle, which is very important, and that credit impulse that they create already started to peak last fall, and has been coming down. It's actually negative the way we measure it. And that means that China's probably, a quarter to 2 quarters ahead of the world. They've been slowing sequentially. We noted that also the Chinese consumption is not coming back as strongly. That may have to do with credit, but also a little bit with that the variants are not that under control as well. So there's still a reluctance in a way by Chinese consumer maybe to act as they did before. That all we see now in global data, in particular when it comes to manufacturing, we see it in German data, countries that export a lot to China. That is going on, but it seems to be still well controlled by China. So we're not too worried about it, but we certainly note that it is a slowing impulse now coming from the Chinese economy on the global economy.
Christian, overall, what do you worry about the world economy? So we'll have you forecast shortly. Yesterday, we saw a move in treasuries because, as you say, some of the concerns out there. I mean, it could be the China crackdown on technology. It's also the variants. It's also, what's happening, frankly, with OPEC Plus and the price of oil. Mm-hmm. Is there something that makes you feel uneasy that we've been too optimistic about the world recovery?
I think on growth, I'm not as concerned. I mean, the market very much focuses on second derivatives. And we said in China already, we probably at the peak in growth momentum end of last year. And what we're seeing increasingly now, and I think the market in the US, in particular in Treasury, has been reacting to this, is that the second derivative in the US has been now surprising on the downside. And we realize this is now the peak in the second quarter. And from here on, things going to slow, however, at a very high level. So we think U.S. growth continues to be quite strong, but markets obviously, they always look at inflection points, and we have reached that inflection point. I think oil is a concern. The fact that we have now an increase in demand, obviously, in particular as the transportation sector opens up. And at the same time, we have these difficulties in OPEC to come to an agreement. That means, there's a risk to further upside on oil. And, that has effects on inflation, but also on growth, in particular in the U.S., where it immediately, transits into pump prices. So I think this is the market, how the market views it. This is why there has been the reaction. However, if I take a step back, I wouldn't be overly concerned. We think this recovery continues to be quite strong, but it's no longer the Goldilocks as before, where everything was accelerating and monetary policy stimulus seemed to be endless.
Christian, thanks so much. Christian Keller there from Barclays. It stays with us. We'll talk a lot more about this recovery. We'll also talk about inflation concerns, and we'll talk about the ECB review, maybe due this week. Coming up, Treasury yields slide as investors start to show concern about the pandemic recovery. We discuss that more with Christian Keller and also look ahead to the Fed minutes. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Economics, final, politics. This is finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacroix in London. I was thinking of the football, the final and the football. So it's a Freudian slip, Leanne. Save me with the Bloomberg First Word News.
I think you and the whole country are thinking of that football final there, Francine. But in the news, Bloomberg has been told Russian government hackers breached the computer systems of the Republican National Committee last week. Sources say they were part of a group known as APT-29 or Cozy Bear, which has been tied to the Kremlin's Foreign Intelligence Service. An RNC spokesman denied its systems were breached or any information stolen. Now, Brooklyn Borough President Eric Adams has won the Democratic primary for mayor of New York City. The Associated Press called the race for Adams with 50.5% of the vote, edging out Catherine Garcia on 49.5%. The primary was the first time the city has used ranked choice of voting. Adams is a favorite to win November's general election over the Republican nominee Curtis Sliwa. Virgin Atlantic and British Airways say they will test a COVID vaccine verification system on some passengers arriving in London's Heathrow Airport. The aim is to prove that airlines can check passengers' vaccine status before they reach border control queues. Chinese President Li Keqiang is calling for deeper cooperation with the UK to boost relations between the two nations as political tensions do simmer. At a virtual meeting with more than 30 British business leaders, Li pledged that China will continue to open up its economy to the world and treat foreign companies equally. And as Francine was just thinking earlier, Italy will play in Sunday's final of the Euro 2020 Championship after beating Spain at Wembley last night in an entertaining semi-final. Roberto Mancini's Italy won 4-2 on penalties to continue their run of wins, now at 13 games. Fears of a half-empty stadium in London did prove unfounded, with supporters from both sides snapping up tickets. Wembley is likely to be even noisier this evening as England, of course, play Denmark. England is hoping to secure a place in a first major final since 1966. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, I've heard actually of kids being able to be dropped off at school later tomorrow because of the game tonight. I have to stop showing off. I've been sent a message by the team saying, please stop showing off because Italy's in the final. I will stop it now. So I'll talk about the markets instead. Briefly, Treasuries holding on to a rally this morning as concerns grow around the economic recovery from the pandemic. 10-year yields hit February lows in U.S. hours after slower than expected service sector growth. Now this morning, fears over the spread of the Delta variant among unvaccinated pockets of the population continue to weigh on investors' minds. Traders also looking ahead to today's Federal Reserve minutes for more clues on when the central bank will begin tapering asset purchases. Now, still with us, Christian Keller from Barclays. Christian, I will ask you about football, but not straight away. When you look at treasuries in general, I feel like we were worrying about inflation. And suddenly, in the last 2 weeks, we worried about it less. Is this groupthink by the markets, or is there really some underlying concern that we'll have runaway inflation?
Yeah, it is quite an interesting shift. How we went from really being concerned about inflation. The FOMC suddenly in June telling us that they're thinking about inflation risks, and now the market actually within a relatively short period had shifted again to growth risks. Obviously, on the data that we've been seeing, which is, as I said, it's second derivatives. It's meaning the momentum is slowing, but even the ISM services data yesterday, which you referred to, it's still a fairly high number. So it's a sector robustly expanding. So I'm not saying the market is wrong here, but I would say it is a market reacting to high frequency news. I think if one steps back, we are less concerned really about growth continuing to be quite robust. And I would say that on the inflation side, there are some risks when you look at oil, etc. So I think the market needs to balance these.
Christian, we're also expecting this ECB review. I mean, this is the first time in 2 decades that we'll have a comprehensive review. I guess one of the most, the juiciest pieces for the markets is what they'll do with inflation. What exactly, how do you see it changing, and what does it mean for the markets?
Yeah, there's several things to discuss, and it's, the inflation target, I think, is at the core. I think it's widely expected that they take out the language, close to but below. And that is something they introduced in 2003 at the last strategic review or strategy review, because before it was below 2%. So they decided then to move it to below but close to 2%. And we think that language now will fall, and it will be just 2%. And there will probably be an emphasis on symmetry around that target, meaning if one has undershot 2% for a while, one may overshoot as well. They are unlikely to go as far as the Fed, talking about an averaging inflation targeting, where explicitly one would make up, so to say, for past below target inflation. But we think that's where they settle, 2% inflation, emphasis on symmetry. That would be already a dovish tilt in a way of the new strategy review. But it's also largely expected. I think if they don't do it, market would be disappointed.
Christian, are we even going to have any traders in London tomorrow after the game today? I know I'm trying to find a way of speaking about football that's kind of related to the market, or I'm just going to ask you who you support, maybe.
Well, first of all, on the traders, it's interesting because, there are a lot of Italian traders and there are a lot of English traders. So I guess it'll be interesting who is in a better mood. Sorry, Italian traders, that is on. I'm already anticipating Sunday, but I shouldn't maybe be too early to anticipate that England goes through. But I think England has very good chances, obviously, to go through tonight. And then hopefully we see some great football on Sunday as well.
Christian, honestly, I think certainly all of the newsroom, but I think all of England thinks that they're already in the final. So good luck to them tonight. And thank you so much for joining us. Christian Keller, their head of economics research at Barclays. Now, coming up, just weeks after Nomura vowed to push ahead with its global ambitions, the firm is pulling the plug on a chunk of its hedge fund business. We'll bring you that story next. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, after pushing ahead with its global ambitions, despite the fallout from the Archegos scandal, Japan's Nomura is suddenly pulling back. Now, the firm is abandoning its cash prime brokerage services in the US and Europe, giving some clients just 6 months to find a new provider. Well, joining us now with the latest is Steve Ahrens. He's Bloomberg's bank reporter in Frankfurt, who, of course, broke part of the story as well. So, Steve, good morning to you. What exactly is Nomura cutting, and why are they doing it now?
So we're looking at, significant cuts to the prime brokerage business. So the business catering to hedge funds in the U.S. and in Europe, and that's where most of the Archegos hit happened. Remember back in late March and April when all the news about Archegos was happening, Nomura was one of the banks most affected by this after Credit Suisse only. And so now we're seeing the ramifications of that percolating through the business, and they decided to, apply those cuts.
So, Steve, how much is this a setback actually for Nomura's global aspirations?
Well, as we know, Nomura has been trying for a long time to be on equal footing, or at least catch up with the bigger rivals in the U.S. and also in Europe. And of course, turning back now on the plan to have cash prime brokerage expansion in the U.S. and also in Europe, that's a setback. If you want to expand and then you make that kind of U-turn after those heavy losses from Archegos, that is a setback. But as we say in the story, the whole business, cash prime brokerage, is just a small part of the overall markets business of Nomura. So in terms of earnings, it's unlikely to have a very severe impact.
At the same time, Wise has a direct listing in London today. What does this mean for London's ambitions to do a tech hub in Europe? I mean, it's a little bit of a different kind of IPO, Steve.
Yeah, it's not even an IPO, it's a direct listing. So they're essentially telling investment banks, we don't need you. We're just going to sell the shares to, the people who ever want to buy them. That's, of course, a risk. If you don't have underwriters for an IPO, then, it could go wrong if you don't find buyers for the shares. So we'll see. I mean, we're really excited to see what's going to happen to the share price once it starts trading. But if it actually becomes a successful listing, then I do think it will be a boon for London, which, as we know, is trying to catch up with other IPO places. And so a positive trading start for Wise would certainly be a very positive for London here.
Steve, thank you so much. Steve Ahrens, Bloomberg's banks reporter in Frankfurt, joining us today. Now, coming up, the European Union has proposed a slate of new rules to bring the world of finance in line with its ambitious goals to make the bloc carbon neutral by 2050. We discuss next with the MEP Anna Michel Azimakopoulou. Before that, we also speak to our Maria today to really try and understand some of the taxonomy, some of the things that we're doing in green finance. This is Bloomberg.
G7 today need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated. The world is possible.
Valuations, particularly sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Closing the loophole, Chinese regulators plan rule changes allowing them to block domestic companies from listing overseas. The country's tech shares sink. Growth concerns. U.S. yields hit their lowest in 4 months, and stocks snap a 7-day winning streak as traders turn wary of the impact of the Delta variant. Fed minutes are due later today. And Bloomberg has learned that Russian government hackers known as Cozy Bear breached the computer systems of the Republican National Committee last week, while the RNC says no data was stolen. Good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on Wednesday, the 7th of July. Now, the EU has set out a green bond standard and tighter measures on banks to better reflect the risks climate change poses to the financial system. The aim is really to bring the world of finance in line with its ambitious goals to make the region carbon neutral by 2050.
This will help to fight greenwashing, recognize bonds that truly represent a sustainable investment, and ensure the integrity of this market. Demand now outstrips supply, and many companies and governments want to issue climate and environmentally friendly debt.
About half of global issuance last year took place in the European Union, and about half of green bonds are denominated in euros, making it the most popular currency for green bonds.
Now, for more, Bloomberg's Maria Today was in Brussels for us. So first of all, Maria, what is the EU trying to achieve when it comes to green financing?
Well, Francine, they say this is a new type of financing for a much greener economy. But, to answer your question, there's two elements to this. One is the European Union is clearly now trying to scale up the market for green bonds. They have to issue about 150 billion euros from next year until 2026. 30% of that will have to be in green bonds. So, of course, they want to make this as liquid and as big as possible. And then the other one is that we're seeing a huge global competition for the green space. And the Europeans do believe that if they're able to legislate and get this done before anyone else and do it quicker and actually show that the risk of greenwashing has gone away for European green bonds, then that would mean they will be able to dominate the market. Now, if you take a look at 2020, you see that half of the issuance that was put into the green space was actually done in euros. So the Europeans do feel that this is an area where they really want to dominate going forward.
Maria, who will actually issue these and what products exactly?
Yes, and then, Francine, that's also interesting because yesterday the European Union made it clear that both EU issuers, but also non-EU issuers will be able to issue European green bonds. They also say that this is really marketed for everyone, financial companies, non-financial companies, also public institutions and governments. What is also key is this element of European green bond standards, which they believe will become the gold standard of green emissions. Now, essentially what it does is that companies and anyone that's issuing this debt will be able to submit, albeit voluntarily, information on their bonds and their products that they're putting out there. So essentially the thinking here is that the more transparent you make this, that removes the risk of greenwashing, and that would entice more investors to buy products that are issued in the green space in the European Union.
All right, Maria, thank you so much. I'm Maria Tadeo. I don't want to speak about the football because I know it was a big loss for you, Maria, because you're from Spain.
No,
I didn't,
Francine, no. You know, you played well, but you know, Francine, that Spain played better. You know it.
Yes, it was the first time in the tournament, though, that Spain did play well. So I don't know, Maria. We'll talk it offline.
But very good for 90 minutes.
Talk about this. Yeah. For 90 minutes, they played well, Spain. Thank you so much to Maria Tadeo there in Brussels. Leanne Gerrans also sent me this amazing fact that I need to say before we get to our wonderful guest. England fans, listen to this, are expected to buy more than 50,000 pints a minute of beer during tonight's semi-final. So that's quite incredible figure. That's Bloomberg Size and Scope for football and beer drinking. Now, joining us not to talk about football, but to talk about much more important things, if there is anything that's more important today than football, which is digital, but also green financing and everything to do with trade, is Anna Michelle Azimakopoulou, a member of the European People's Party at the European Parliament. She's vice chair of the Committee on International Trade, as well as being a member for other committees on development and AI in a digital age. She's, of course, from Greece. And Anna Michelle, you've been wonderful through the years in making us wiser on the Commission's thinking about some of these important issues. Anna Michelle, first of all, thank you so much for joining us. When you look at green financing and exactly what will need to be there, it seems that the EU is taking the lead, spearheading all of the global efforts for finance in green bonds. Can we avoid greenwashing? I know you've written extensively about this.
Right. Thank you, Francine. And as you're gloating, I'll just say congratulations and good luck on the making a comment for the football. Yes, it's right. It's true that the EU is really now trying to use what's called the Brussels effect, that is legislate standards that then de facto become gold standards across the world. It's done this very successfully on a number of issues in the past, like the GDPR, for example. It's trying to do it now with its Artificial Intelligence Act. So I think that, you know, the bottom line, Francine, is that we need a lot of money to achieve these targets for 2050 and even for 2030. I think the estimate is we need something like $500 billion additional investment every year for the next 10 years in order to meet the targets that the EU has set. So if we're going to attract this capital and we need private investment, what we definitely have to do is provide the standards, make the rules. And the EU wants to win this game, if you make the rules, then you have greater chances of winning the games. The EU also wants to achieve what it calls its own strategic autonomy. And this has a lot to do with digital. It has a lot to do with energy. And so to achieve this sustainability, the EU is putting forth these rules today. And I think that it's going to make a big difference and make things much more clearer, give us a level playing field and attract the funds that are necessary. So we all favor this in the Parliament also. This is going to come through us in the next few months. We see this as a positive step. We see this as a good thing to avoid greenwashing, to have transparency, and ultimately to help us achieve our very ambitious goals in 2030 and 2050.
Do you see actually private investment coming into the right places? So if we look at digital, Anna Michelle, and one of the stories that we've been talking about nonstop for the last 2 to 3 days is the fact that, for example, China is cracking down on some of their Chinese technology companies because they're worried about data. Is there an opportunity maybe for Europe to do that bridge with China if they're, freezing out the US?
Yeah, well, I think that, we made an investment in our transatlantic relationship at the EU summit and started this Trade and Tech Council, which I'm I'm very pleased that this work is going to go forward, because I think that like-minded partners who have the same concept of democracy and who have the same values should work together on all these ambitious issues. At the moment, things with China and the KAI are frozen, and that's because we can't go forward while there are sanctions on parliamentarians at the European Parliament and on other EU officials. This just can't move forward. We need to realign our relationship, and we need to build more trust. They're an important trading partner, but we also call China a systemic rival. They have different concept of what is acceptable in the digital realm with respect to data, and therefore we need to move forward, treading very carefully when it comes to this relationship.
And Michelle, you understand AI, maybe, certainly more than most people, but also certainly more than most people also in power. Are we underestimating the impact that AI could have on jobs? So is there are you taking away some jobs because of AI, but we're creating them with green finance and climate change? Or how does that work? Are we under or overestimating the impact of AI on our daily lives?
I don't think it's possible to underestimate it. This is just going to permeate everything in our lives. So I think that most policymakers now have their head around it, and I think that people are starting to come to terms with it. But like every other technology, it's what you make of it, Francine, and that's why the approach that the European Union is taking is what we call human-centric. It's, technology is supposed to make our life better. It's not supposed to be a dangerous thing. So we're taking this risk-based approach in our AI legislation. It's definitely time to regulate artificial intelligence. And again, this has to be done on a global basis. And who should the EU be doing this with? Again, it's a transatlantic thing. It's with like-minded partners who have the same core values and who have the same concept and want to see democracy reborn into democracy 2.0. I'm Greek, and in Greece now we, in the midst of the pandemic, the Kyriakos Mitsotakis' government has made leaps and bounds in digital transformation. And democracy is at the core of our values. So along with Greece 2.0, we're championing democracy 2.0 across the world. And I think this should be the binding factor in any technological progress that takes place from now on.
Yeah, and it's amazing, and I'm shocked to see how, from where Greece was to where it's now in a couple of years. On trade, do you worry about supply chains? Should we, everyone's worrying about supply chains, but will it last longer than even what we're talking about now? I know you're on various committees looking at trade and actually how the EU can deal with that.
And so they should be worried about supply chains. Francine, we saw during the pandemic that we had some very dangerous dependencies. And that's why we're now championing this open strategic autonomy. We want to, in the EU, continue to use our power as one of the largest trading bloc in order to ensure that we have what we need. And this is not about, don't get me wrong, this is not about protectionism. We know we can't produce everything we need. We have to be open, but we have to have choices and options. This is what diversification means. This is what resilience means. And if we're going to have this dual transition, digital and green, we need, for example, many critical raw materials that at the moment, the truth is, most of them are being produced in China. So we have to, this is why we've made this critical raw materials alliance, an alliance where we're making sure that we have globally what we need at our disposal to reach our goals.
And Michelle, what's your take on Greece right now? So you mentioned the Prime Minister. It does feel like every single Bloomberg anchor, certainly that's based in the U.S., is currently holidaying in Greece, and that has to be a plus in terms of tourism revenue, because most of them are big spenders. Yeah. But Anna Michelle, are you worried about the cool islands? That's where our crew hangs out. Anna Michelle, do you worry about kind of leaving people behind so that you have a good recovery, that COVID is taken care of, but that some people really still feel left behind?
The Mitsotakis government is a government that has spearheaded reform even during the COVID years with, I don't know, I was reading today, it's like 197 pieces of legislation that they managed to get through. And Greece is back on track. Greece has gained its credibility internationally. We can actually borrow at rates that are lower than many, many years through the financial crisis. And Kyriakos Mitsotakis is a man with a plan. And his plan is not to leave anybody behind. Our Recovery and Resilience Fund plan, which is called Greece 2.0, really was well received in Brussels. It's well thought out. It's realistic. There's a plan. There's money coming in. We've managed to attract some serious investors in the last couple of years. We're redoing the Greek Riviera. As you know, Microsoft invested here, Pfizer invested here. So I think that I'm optimistic when I look at the future for Greece, and I'm sure that this government will make sure that everything is all inclusive and nobody is left behind.
Anna Michelle Asimakopoulou, thank you so much for joining us today, European Parliament member from Greece. Now, coming up, just days after China's version of Uber pulled off a mammoth IPO in New York, shares in Didi slump after a Chinese tech crackdown. Now, China says it will look into closing the loophole, allowing domestic companies to list abroad. We'll hear more from our interview with the EV maker, Jinpeng. That's coming up next, and this is Bloomberg.
个人目标，可能会接下来会继续锻炼身体，会尝试去做7+2，再次感谢，曾经给我力量、给我能量的艾瑞克。
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Shell is to boost returns to investors later this month as its core business gets stronger due to a recovery in energy demand and rising prices. The Anglo-Dutch oil giant says it will raise total distributions to shareholders to between 20 and 30% of cash flow from its operations. It did not specify whether this would be through dividends or share buybacks. Now, the Pentagon has scrapped a $10 billion cloud computing deal with Microsoft after several years of wrangling, with plans to divide the work between Microsoft and rival Amazon. Instead, Amazon had argued in court that political interference from former President Donald Trump has cost the computer company the lucrative cloud contract. Samsung has reported better than expected profit as chip prices and shipments rose on strong server demand. The company said the earnings reflected a one-time gain related to its display business. Analysts say this is likely a payment from Apple for failing to meet contract requirements for screen supplies after iPhone mini sales came in lower than expected. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Xi Jinping fluctuated in its Hong Kong trading debut after becoming the first Chinese electric vehicle maker to finish the so-called homecoming share sale, raising $1.8 billion. Now, Bloomberg's Yvonne Mann spoke to the vice chairman and President Brian Gu.
Well, I think having a listing venue closer to home is always in our strategy. I think as a China consumer brand, I think we want to have our customers ultimately be our shareholders as well. So coming to Hong Kong gives an opportunity to achieve that goal.
Some Chinese companies listed in the U.S., though, are hedging their bets, I guess, or hedging against any kind of possible delisting from U.S. exchanges. And now it seems like there's this newfound pressure from Chinese regulators when it comes to data security, data privacy. To what extent do you think this DD probe is only going to speed up more Chinese companies to come back home and list?
Well, I think overall, the regulatory environment is becoming more and more focused on the softer side now. You know, the data side, the privacy side, the national security side. Those were not probably focused as much. But I think it's something we anticipate because we see the global regulatory environment gets tighter and tighter. It's just not in China. The data privacy, data security is a big topic in Europe. That's why we're building up an effort there. In the U.S., too, I think people focus very seriously on these issues. So I think as a company that operates globally, you have to really be prepared to face and to address all these issues and its regulatory oversight.
Let's talk about the competition. Tesla seems to have run into some issues in China, whether it's recalls of nearly all its vehicles in China, the software issues. Does the timing seem right now for XPeng to build your war chest and gain some ground?
Last year, we saw Tesla lowered prices on their product several times, and people are asking us, okay, whether that will impact XPeng because we directly compete with Tesla on our models. But the result is actually we both thrived. We both grown quite well and tremendously expanded the pie and market share for China. So I think ultimately having a good competition and will strengthen yourself. And I think Tesla is a tremendously powerful brand. It has great technologies and products. So we think they still continue to kind of do well in China. But whether they will have the dominant share like they had before, that's probably something we'll watch. That will probably be difficult to maintain, I think.
Xi Jinping Vice Chairman and President Brian Gu there speaking with Bloomberg's Yvonne Mann. Now coming up, Bloomberg has learned that Russian government hackers breached the computer systems of the Republican National Committee last week. The GOP and Russia deny this. All of the details next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at some of the events we're watching today. At 10 a.m. London time, the European Commission will release its summer economic forecasts. Then over in the U.S., analysts will be closely watching the job openings and labor turnover survey report. That's at 3 p.m. London time. At 7 p.m., we'll be getting the latest FOMC minutes. We'll get, of course, more color on the change in projections, but really, finally, the most important story of the day, even if you're a trader, is the Euro's second semi-final. It kicks off at 8 p.m. tonight. The winner of England versus Denmark will join Italy in the final. So expect all of England to have a massive hangover tomorrow. Now, a couple of facts and figures about tonight's match from the British Beer and Pub Association. I mean, we like Sight and Scope at Bloomberg, so we never let you go without telling you why we think everyone's going to be hungover. England fans are expected to buy more than 50,000 pints a minute during tonight's semi-final. That equates to around 6.8 million drinks over the 90-minute match. If England beats Denmark, they'll reach their first final of a knockout tournament since 1966. I actually have a really funny story about asking for more drinks for a wedding in Italy where they were like shocked that the Brits would drink so much. Now, to one of our top stories, and Bloomberg's been told that the Russian government hackers breached the computer systems of the Republican National Committee last week. Sources say that they were part of a group known as Cozy Bear, which has been tied to the Kremlin's Foreign Intelligence Service. A RNC spokesman denied the system were breached. Well, joining us now is Bloomberg's reporter Bruce Einhorn. Bruce, what do we actually know about the breach of the RNC?
So we know, according to two people familiar with the matter, that this breach took place last week. As you said, it was by hackers who are part of this group called Cozy Bear, which is tied to Russian foreign intelligence. This is the same group that was behind the 2016 hacking of the Democratic National Committee, and then more recently behind the big SolarWinds attack that took place last year that we found out about in December. The Republican National Committee has said that there was no hack. The Russian embassy in Washington has also issued a statement denying this, saying that there's no evidence of this. This takes place at a time when there is other hacking going on. So there's a lot of activity coming from Russia, we think, when it comes to breaches of security.
Bruce, thank you so much. Bruce Einhorn there, of course, on this ransomware. Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
a bit of a historic day. It was the first time Indigenous designers showcased at Australian Fashion Week, and it was a full house of all Indigenous talent.
It made me so proud. Absolutely beautifully done. I mean, the designers, the pieces on there, I think just about every model or every second model was like, oh, I want that, I want that. So each of my pieces, we have our signature prints, which are each tell a story and is definitely a contemporary way of experiencing Aboriginal culture. And then each of my pieces are named after, inspiring Aboriginal and Torres Strait Islander women. So when the customer buys something, they're learning about the story, they're learning about women. I would hope that it isn't tokenistic, and I would hope that it's not done to tick a box. And so, those things you have to be mindful about that. But I think it's incredible what's been achieved so far, but, there's always room for growth. I think the elevation of Aboriginal and Torres Strait Islander people in these spaces, it's long overdue, and it's a really powerful and incredible time, I think, and to be a part of that is really special.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Clearly, I don't even think the Chinese have been trying to hide the ball. They want control over just about every financial transaction and corporate move in the country.
The regulatory environment is becoming more and more focused on the softer side now, the data side, the privacy side, the national security side.
The administration has been focused much more on China than on any other foreign policy issue. They haven't quite put together a comprehensive or coherent policy.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, 5 p.m. in Hong Kong on this Wednesday, July the 7th. Our top stories today. Closing the loophole, China plan rules changes that could prevent the country's giant tech companies from listing shares in the U.S. Nomura pulls back. The Japanese brokerage boasts its of global ambitions, but now it's scrapping the plug on a chunk of its hedge fund business. And the rich get richer. Jeff Bezos' fortune hits a record $211 billion after Amazon wins a share of a lucrative cloud computing contract from the Pentagon. Well, good morning. I'm Francine Lacqua with Matt Miller and Danny Berger. Keely Lines is off today. Now, we begin with some breaking news from the European Commission. Don't mention the football. Not yet, Matt and Danny. I know I want to talk about it, but I've been told I'm gloating. So I'll focus on the Commission actually lifting its 2021 euro area growth forecast to 4.8% from 4.3% earlier. And I think inflation is also a little bit more than expected. So we were expecting, or they were expecting it to be at 1.3. It's now at 1.9. Matt, we're not talking about football yet, but there was a repricing in treasuries.
I will also point out that
I will talk about
Amazon hasn't. I'm not sure Amazon has actually won this contract with the Pentagon. I don't think it's been officially awarded. This is, I think, one of the most interesting stories, Francine, of the day. Yeah. It's just that the Pentagon is now going to consider Amazon as well as Microsoft.
Yeah, I think the story and our reporting made it very clear, Matt, that actually they were looking at, instead of just giving it because of legal wranglings between the two companies, probably split it and give it to both of them.
Right. Well, it's a different contract now. That was the JEDI contract. Now we're talking about the JWCC. the technology has changed so much in 3.5 years that they're going to open it up. They say that's the reason. And they're also going to let IBM, Oracle, and others bid, but it just looks like Amazon and Microsoft are the only ones big enough. Fascinating story. We're going to get to it. I'm pretty pumped about that. In terms of the markets in Asia, that's also been hit by the other really fascinating story this morning, and that is China. Making it more difficult for companies with offshore units to IPO. You can see that we've got a mixed picture in terms of what stocks are doing right now in Asia, and the MSCI Asia Pacific Index isn't moving so much to the downside. You can see it's down about 0.4%. But those two stocks are the biggest losers on the index, Alibaba and Tencent. It's the tech crackdown that's really hitting Asian markets. I threw in whole milk futures there, down 2.9, almost 3%, 3 standard deviation move away from the 30-day average, but also because I feel like I need a little bit of milk today after yesterday's football match. I now understand why Europeans watch this game. It's because you can drink so much during these matches, right? They consume a lot of alcohol while watching. Doesn't matter if they don't score very much. It just means another cocktail, right, Danny?
For some reason, the idea of beer and milk together just like sounds so gross to me. I realize you're not drinking both of them at the same time, Matt, but for some reason that's
Danny,
a little off-putting to me.
Did Matt say cocktails and football?
Yeah, wait, what, Matt? Are you drinking, what are you drinking, White Russians? What are you having watching
the
football?
adult beverage of my choice, and I just feel like I need to counterbalance it the next day with wholesome milk. Milk makes me think of mom, you know, being a kid growing up. I need to get back to my pure roots. In any case, what do you got? What's going on in European markets?
All right. Well, European markets, look, we did have that European Commission come out and upgrading their growth forecast. It does look like a really strong day here on the European continent and in the UK as well, in Eastern Europe. They are warning about inflation risk, but again, that doesn't seem to really dent any of the rally we're seeing. I mean, I don't think anyone believes that the ECB is going to be tightening sooner than the Fed, but some of the standouts, you have the DAX up 0.7%. You have the CAC 40 up 0.3%. Spain is actually a touch weaker today, but it really is the technology, the kind of momentum stocks that are standing out in today's trading session. So that means for the entirety of the index, we're seeing a gain of 0.5%. Yesterday was a gain of 0.5%. So we're continuing to build on some of these gains despite the negative session in the US yesterday. A euro, which is slightly stronger versus the dollar at 118. And looking at what's happening in the US, we continue to get this buying of bonds. The bond market is absolutely on fire right now. You have 30-year yields below 2%. You have 10-year yields at one spot, 34.47. So that is also at its lowest in quite some time, since February or thereabouts. I was talking to Andy Brenner from Nat Alliance last night, who said pensions are buying the long end of the curve like hotcakes. We had that ISM data that fueled these concerns about growth. I mean, this is a very different market from a couple weeks ago that was worried about inflation and what the Fed might do with it. At the same time, we do have oil moving higher. We're above $74 a barrel. But of course, the U.S. and the White House saying that they're encouraged by talks going on, Francine, in the Middle East. Of course, they don't want gasoline more expensive. They want everyone to go out in their F1 trucks, F-150 trucks, go buy gas, and just not have to worry about the price.
Yeah, 100%. I'm distracted because of the final. I'm sorry, Danny. I do care about the oil price, and I know you forecasts are also really interesting, and it's moving treasuries. But Leanne Gerrans this morning also gave me this amazing fact, which goes back to the fact that, you know, Denmark is playing England today, fine. Right. Italy's in the final. Okay, look at this. England fans, Danny, are expected to buy more than 50,000 pints a minute during tonight's semifinal.
A minute?
I mean,
okay. This concerns me because I come into the office at about 3 a.m., Francine. I guarantee you that I'm going to see a lot of those fans who have bought the collective 50,000 pints a minute. And I'm kind of scared. I mean, I'm a little bit scared.
It's 6.8 million drinks during the match. And I guess that's not counting extra time and penalties if they go to that.
Not a lot of milk being drunk, I'm assuming.
No, the next day.
Drunk.
The next day.
Yeah, You have to do it before. All right, I'm saving us and looking at what's ahead today as well, apart from the big match this afternoon or this evening. 10 a.m. New York time, the job openings and labor turnover survey report. It will show the number of available positions in May. 2 p.m. we'll be getting the minutes from the FOMC's June meeting. Finally, the Euros second semifinal kicks off at 8 p.m. tonight. The winner of England versus Denmark will join Italy in the final. Whatever you do, do not talk about football with our Maria Tadeo. So let's get to our breaking news out of the European Commission. Officials markedly raised their outlook for the euro area economy, said there's a higher risk of inflation taking hold. So with the very latest is our Maria. Maria, first of all, I'm really sorry Spain didn't make it to the final, but actually forecasts at least are looking better for the EU.
Francine, you know, you're making my job so difficult this morning. I honestly, I feel like I want to go. But look, let's just speak to the data here. So essentially, yes, Francine, they're increasing their forecast for the European economy from 4.3 to 4.8. They're also increasing the inflation outlook to 1.9 this year. So that's very close to the European Central Bank's 2, but below close to 2%. And if you look at the individual countries, yes, you're correct, Francine. Spain will actually see the biggest rebound in the whole of the European Union. They predict an increase of 6.2%, 6.3% this year. That would be followed by France with an economy that should be jumping about 6%, and then followed by Italy. Of course, a lot of this, Francine, is driven by the fact that we're reopening across Europe. We're seeing those restrictions come to an end, especially heading into the summer. So that's been very good for the service industry and the service economy in Europe. However, the Commission does say that while the risks are now broadly balanced, there is still a risk pegged to coronavirus, the Delta variant, and a potential wave when we get back from the summer holidays. Remember, that's what happened last year in Europe, and we did see those restrictions kick back in September.
All right, Maria Tadeo. Spain was the better team last night. I mean, for anyone who watched the game, obviously Spain played a better game and then just lost in penalties, right?
Listen, look, we have to put this to rest. Spain did play the better game. When you go to penalties, it's not about skill, it's luck. And I have to say, you know, I like my team when we win and when we lose.
I was in tears. Maria Tadeo from Brussels talking to us about, I think it was some economic. It was an economic report of sorts. In any case, thank you, Maria. Let's get to the China story now. Regulators planning to change some of the rules that have previously allowed Chinese companies to lift overseas. This would make that much more difficult. It would be the case even if the unit of the company selling shares is incorporated outside of China, and this is one of the loopholes that big companies have used. Let's get to John Liu. He's our executive editor for Greater China. So, John, this really cements the crackdown on really big tech companies that we've seen out of Beijing.
So this is really a sign of Beijing reaching further than they have in the past. And you mentioned, you know, big companies like Alibaba. What they did before was they would set up a unit offshore in the Cayman Islands and the British Virgin Islands, and then they would list that unit. And because that unit was incorporated outside of China, the regulators in Beijing had no way to exert their influence or control over that listing. So for the example of Didi over the past week, we've had reporting this week that Chinese regulators suggested to Didi as much as 3 months ago that they should not list, that they should delay that listing. But Didi went ahead and listed. And so I think you can see why Beijing would be keen to be able to exert that influence, to be able to have that control over these companies and when they can actually do a listing.
What exactly does it mean for future listings? So do they just need to get approval, or will they go elsewhere than the U.S.?
So under this proposed change, any company that wants to list in the U.S., for example, would have to first show Chinese regulators that they meet all the requirements that Beijing has for that company. So for example, in the Didi scenario, Didi would have had to show Chinese regulators that they were adequately enough protecting their data. So all this data that Didi has about where people travel day in and day out, making sure that that was secure.
John, thanks for staying on top of this for us. That's John Liu, our executive editor for Greater China. Now, after pushing ahead with its global ambitions, despite the fallout from the Archegos scandal, Japan's Nomura is suddenly pulling back. Let's get the scoop from Bloomberg banking reporter Steve Ahrens. Stephen, so exactly what parts of the business is Nomura cutting here? Because it's not the entirety of the prime brokerage, is it?
That's right. It's not the entirety. They're shuttering cash prime brokerage in the U.S. and in Europe. So that's an important part, clearly, but it's not all of it. And also, keep in mind what we wrote in the story, it's not a big part of the global markets business overall. But still, they had the ambition to grow that part of the business. They wanted to get bigger. They wanted to catch up with the rivals in the U.S. and also in Europe. And that plan seems to be at least partly obsolete. And that's an important development for Nomura and its global ambitions.
Steve, talk to me about Wise. So it's not an IPO, but actually it's listing in London, and it could be, you know, if they get this right, it could be like a future path for other big companies.
Yeah, I guess so. I mean, it's a tantalizing even event if they get this right. As you said, it's a direct listing, which means they're selling this without investment banks, without any professional underwriters who say, we'll back you up. If, you know, we don't have enough demand for this, then we'll buy this from you we're taking on the risk, essentially. This is not happening with Wise. They're saying we're doing this on our own, and we'll have enough buyers, and we'll let complete free market forces set the price. We'll see how it plays out. I mean, if this happens, if there's enough demand, if London as a venue can show there's enough investors to buy this kind of stuff from the shares in Wise, a fintech company, then yeah, it would be a big a boost for the ambitions of London to become a platform for more IPOs, for more listings of fintech companies.
Well, I'm certain they're trying to erase the memory of that Deliveroo IPO, which did pretty poorly. Stephen, thank you so much. That's Stephen Ahrens. Now, I want to look at some of the stocks that are on the move this morning, starting with what John was talking to us about, and that's, of course, the China crackdown on U.S.-listed IPOs. DiDi continues another day of falling about 4%. Really fascinating story out of our investing team from Hema Parmar, talking about all of the hedge funds that own DiDi, that invested in DiDi, Tiger Global, as far back as 2014. So if you thought Wall Street bets had it out for the hedge funds, they had another thing coming with this crackdown, certainly experienced some losses there. Another stock for you that, again, is part of this China crackdown is Full Truck Alliance, down another 14%. Again, another stock below its IPO price. Finally, another stock that is a Chinese company listed in the U.S., and I don't understand the price moves. Matt, I tried to talk to you about this one yesterday, and you don't care about hip-hop. So instead, Francine, I think maybe you're into, yeah, exactly. So they do like kind of hip hop dance festivals, that sort of thing in China. For some reason, this stock fell yesterday, again, because it's part of this whole issue of Chinese stocks listed in the US, but for some reason, it's up 27% pre-market. I can't quite wrap my head around why, because everything else is falling quite significantly. That's a Chinese company listed in the U.S. Maybe everybody else, unlike Matt Miller, likes hip-hop. I don't know.
Yeah, you and I are into K-pop. I mean, we're just so cool. Matt Miller is the boomer. I'll pay for that. But there you go. I've said it live on TV. Up next, Seema Shah, Principal Global Investors Chief Strategist. We'll talk, of course, about treasuries. We'll talk about Fed minutes. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kaylee Lyons is off this week. Now, joining us to talk about the markets, treasuries, maybe a bit of football, Seema Shah, Principal Global Investors Chief Strategist. Seema, thank you so much for joining us. Let me actually start off with what we heard from the EU, which is a raising of the forecast for both inflation and growth. Does it make the EU stocks or EU assets more attractive?
Well, I think they've already had a pretty good run up to here. So we're getting to that point where they're going to also hit that peak acceleration. You know, it was interesting. We saw Spain, Italy doing better, which is exactly what we'd expect. They were the ones to reopen a little bit latest. It is interesting, though, that because that Delta variant, if it does continue to restrict tourism, those are the countries which are unfortunately going to be hit the worst. So we do need to keep a close eye on that one.
In terms of, Danny Berger put together a chart today just showing the Bloomberg U.S. Surprise Index, and it's at the lowest point that it's been, I don't know, in like a year. Are we over the hill now? I mean, is everything priced in terms of the growth and the rebound?
Well, look, I think it's fair to say that at least in the U.S., we probably have hit peak recovery. You're less likely to get these kind of upside surprises. But keep in mind also that they're resting at very, very high levels now. This is a strong recovery. Fundamentals are good. We should see that play out in earnings season, both Q2 and of course in Q3. And that should be a good, solid base for equities to continue to perform well. Of course, not as well as we've clearly experienced over the last 12 months, though.
Well, first off, I'm very flattered Matt has decided to pull up my chart. I like that one as well. But Seema, if you look at what's happening in the bond market, you have a 10-year nominal yield below 1.35. You have a 30-year yield below 2%. Is that only just pricing that we're past the peak of growth, or is it saying something more sinister to you?
Well, the way that I look at it is I think there's a lot of technicals at play with bond yields at the moment, but also I think it's a lot more about the Fed and concerns that the Fed has missed out one opportunity to get inflation above that 2% to a healthier level. And I think that's what the market is really worried about. And that's the fundamental driver. But I think the growth prospects are still strong. And that, at some point should once again overwhelm anything else. And we should see a continued, or at least a reverted rise in bond yields through the rest of the year at some point.
Seema, I feel like the market is not really that worried about inflation anymore for no real reason, and that's happened in the last 10 days or so. Is there too much groupthink?
Well, I think, we also believe that inflation is going to be transitory. Supply shortages should eventually start to ebb away. Inflation expectations at the moment certainly not a bit of a concern. But of course, there is a lot of upside risk to inflation. We could see these supply shortages continue for that much longer. And the one thing for us I think to keep an eye on is whether or not companies are going to be passing on these higher costs to consumers. If they are, then we're looking at a stickier inflation. And then given, as you said, that markets have started to be less concerned, that would be a very negative surprise and something that would, of course, weigh on risk markets.
Seema, thank you so much. Seema Shah, their Principal Global Investors Chief Strategist, joining us with wisdom, as always. Now, coming up, we'll speak with the former Federal Reserve Vice Chair, Alan Blinder, ahead of the release of today's FOMC minutes. That interview, 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television. Curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance. Weekday mornings on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix with Matt Miller and Danny Berger. Kaylee Lyons is off today. Now let's get straight to the Bloomberg. First word news on Hurricane Elsa has now weakened to a tropical storm in the Gulf of Mexico. It's expected to make landfall today north of Tampa. The storm's top winds reached 70 miles an hour. The concern is that Elsa could push a dangerous storm surge into Tampa Bay, raising ocean levels up to 5 feet. President Biden will take on the rapidly growing threat of ransomware against companies and local institutions. Now, over the weekend, there was a ransomware attack blamed on Russian hackers that affected more than 1,000 businesses with victims in at least 17 countries. The president will meet with agency leaders today to discuss administration strategy. The White House calls it a national security priority. And in New York City, former police officer Eric Adams has won the Democratic mayoral primary. That makes Brooklyn Borough president the overwhelmingly favorite to be elected mayor in November. Well, Adams held off former sanitation commissioner Catherine Garcia by 1 percentage point in the ranked choice voting. Now, coming up next, we'll speak with Dirk Albesmeyer, JP Morgan co-head of global M&A. We'll talk about M&A. We'll talk about what's in the pipeline. This is Bloomberg.
excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more, they might just need just some practical experience in an Australian kitchen. have many friends.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Kaylee Lyons is off today. Matt, I know we look at the Treasury move we saw yesterday. There was really some pretty interesting stories out there in terms of ransomware, and then the other one is the Fed minutes a little bit later on.
Yeah, I mean, the Fed minutes will be interesting to see how the Treasury market reacts to that, because we were down to, I think, 133. Right now we're at 134.64 on the 10-year. It's just pretty amazing that we're in a situation where the Fed is talking about tapering and investors are piling in to government debt. Usually you'd think it would go the other way. Maybe they've done something incredibly right this time, but no one has been able so far to explain to me why we continue to fall lower and lower on treasuries as the Fed gets more hawkish.
No, but I guess we keep on trying. You know, that this is, I guess, the concern. It's, you know, people are starting to worry whether it's groupthink because there's not one specific fundamental thing that it's actually driving markets either way. Danny, how's it playing out in the markets?
Well, one explanation I have heard, again, I mentioned him earlier, but Andy Brenner over at Nat Alliance, who really focuses on the bond market, says that what it's doing is it's pricing in concern about growth from 6 to 12 months from here on out. And we continue to see that buying in bond markets today. In fact, it is a day where people are just buying absolutely everything. I mean, complete green on my board, be it the 10-year, be it S&P futures, NASDAQ futures, Brent, even after the U.S. hinting that we're going to perhaps get a deal. JP Morgan thinks we're going to get a deal out of OPEC as well. But one of the things that's interesting to look through all of this is the degree to which lower yields and higher tech has become increasingly linked together. You have a NASDAQ 100 futures that's up nearly 0.5%. People are moving into these growth stocks. Again, if it's like Brenner says, and the concern here is about growth, you maybe don't want to be buying value and you want to be buying NASDAQ futures. So that compares to a 0.2% gain when it comes to S&P futures. Now, the other big cross current when it comes to tech is, of course, what's happening with China cracking down on U.S. IPOs of Chinese companies. So you have DD moving lower by more than 3.5%. Elsewhere, though, energy doing better today. One of the best performing sectors when it comes to these sector ETFs, with oil doing better, copper doing better. So that's the one pocket today where we're starting to see that more cyclical trade come through after it was hammered yesterday. And finally, I guess I have CPOP on here again. I just still can't get over it. So those shares up about 27%. Again, this is another China listed company that is doing better despite the destruction elsewhere, Fran.
Yeah, I love that story. I mean, I'm all about hip-hop. Now, tech and media moguls have descended on Sun Valley, Idaho, for the annual Allen & Co. conference. The gathering has spurred deal-making in the past, and all focus, of course, is on any M&A action. Discovery Chief Executive Zaslav spoke to reporters as he arrived. He said media consolidation will only accelerate and got into the timeline for his company's acquisition of AT&T's film and TV businesses.
We've gotten a positive reaction so far. So we're hoping that it'll be another 8 months. Could be longer than that, but things are going well. AT&T team's working hard. Our team is working hard. So very exciting bringing these two companies together. We have a strategy that we've developed, and now we'll see how HBO Max does and HBO over the next year, how we do with Discovery Plus, and we'll see if we can come up with something, some best practice.
There you go, the Discovery Chief Executive rocking the sunglasses. Now, let's get into the outlook for deal-making with the JP Morgan Global Co-Head of M&A. He's Dirk Albasmeyer. JP Morgan advised on that Discovery Warner Media deal. Dirk, as always, thank you so much for coming on. How much more do you have in the pipeline? So how much M&A are you expecting to pick up in the next 12 months?
Look, obviously, we had an amazing start with over $3 trillion of announced transactions.
but there's really no sign of slowing. And when you look at it, like the world came out of COVID in a very synchronized way. And what we are now really seeing is that while I think all the kind of trends of the first half continue, on top we can travel again. It clearly helps with deal making. We're now moving into a kind of hybrid world where we continue to use the benefits of like the internet and the virtual kind of world while like having more physical meetings and it matters. I think that all of that makes us very comfortable that like the kind of strong kind of first half will continue. Now that won't last forever, that's clear, but at this point there are really no signs of slowing.
Dirk, what does that mean for, are we actually expecting very big deals? And are these big deals, are they going to be cross-border? Or do you see, because of COVID and recessionary concerns, a lot of governments being much more inward-looking and blocking some cross-border?
Look, as I said, it's really above all like industries, and cross-border hasn't been the main driver, but we've seen like more mega deals coming back. But more importantly, really like sponsors have been a major kind of driver in the first half. Usually about 25% of M&A is sponsor-driven. At the moment, we have like about 38. That's substantially up from like what we've seen in the past. They have enormous firepower. They're seen as a very attractive kind of buyer group. And most importantly, they're doing ever bigger deals. And we look at the Medline transaction, it clearly reset the kind of art of the possible. But historically, people saw like 10 billion as the maximum they could do in terms of a single equity check. Now we are seeing people being able to put together consortia that easily can do $15 billion equity. And that means while so far the focus has been on the P2P side more on the kind of 1 to 5 billion, we are seeing sponsors now moving to the 10 to 20 billion. And when you look at the Europe, UK clearly is at the forefront. While we had like 4 P2Ps last year, we already have seen 9 in the first half. So I think all of that makes us very comfortable that like kind of strong pace we've seen in the first 6 months will continue into the second half.
Do you see, Derek, financing through cash, through equity, through debt? What's the trend right now?
No real change. So cash remains like the currency of choice. Clearly, like people have like attractive stock to offer, but at the same time, with like strong kind of earnings momentum, most of the deals are still done in cash. For some of the larger deals, we are seeing more stock, but overall, cash remains a kind of preferred currency, and I don't think that will change.
Well, I'm curious to know how you view the SPAC phenomenon that we watched. I mean, obviously, we had what some people would call a bubble, but that was just gathering the cash, right? Now those SPACs are putting it to work in deals. How should we expect it to work out?
No, look, that's an interesting question. We clearly saw like a rush in the first half, and like by now we have about 140 announced SPAC mergers that haven't closed, that are about to close in the next 90 days. I think that's going to be important because so far about 40 billion of pipe capital is linked to these deals, and investors are somewhat reluctant to commit additional capital until these deals effectively are happening and people see how it trades. I think the good news is deals are closing, and when you look at the deals that have closed, about 80, 2/3 of them are trading nicely, with an average 15% up. So what we expect is clearly that there's a bit of a digestion now, that over the summer, that will work itself through, and then in the second half, post-summer, we will see more kind of M&A. Don't forget, there's still over 400 companies or SPACs out there looking for targets, but clearly the pace that we saw in the first quarter wasn't sustainable, and what we now believe is that this market will mature quickly and clearly will become an important part of the M&A market, but in a kind of more manageable size.
Speaking of looking for targets, how much of what we're seeing come out of the private equity space and their desire to find targets is from pressure from investors after having built up record amounts of dry powder?
Well, look, clearly the activism bit is an important question you're raising here. We've seen like campaigns going up 50%, and like what happened, I think, post-COVID, people were really like now looking at their strategy again, asking themselves, what is really the kind of core business and what are the areas where we might not be able to compete? And that's exactly where the activist goes in. And people try to be proactive. They try to effectively avoid being like the subject of an attack. And that's why like non-core divestitures and kind of carve-outs will play like a very important part in the second half, with more companies really like realizing that in a post-COVID world, being focused, growing fast within your core kind of business is more important than being widely spread over like different divisions.
Dirk, talk to me a little bit about the SPAC rally. Is it here to stay? And actually, what are you expecting for the second half of the year?
Look, the spec rally, as I said before, clearly at the moment it's slow. We will see in Europe, what I think may be interesting is out of the kind of 140 spec mergers we have seen year to date, 23 at the European target. So that's still a small amount, but clearly like a number that will increase. So I think specs make a lot of sense for certain companies, and I think on that part we'll continue, but we won't be able to find like maybe enough good targets for all the specs currently out there looking for like targets to bring to the market.
Dirk, thanks so much. Dirk Albismeyer, JP Morgan Global Co-Head of M&A. Now coming up, Russia's latest cyber attack, how a group known as Cozy Bear breached the computer systems of the Republican National Committee. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lack with Matt Miller and Danny Berger. Kaylee Lyons is off today. Now, Bloomberg has learned that the Russian government hackers broke into the computer systems of the Republican National Committee last week. It took place around the time a Russia-linked criminal group unleashed a massive ransomware attack. Now, Republican Party officials say there's no indication any information was stolen. Now, joining us for more on this is Rosalind Matheson, Bloomberg Executive Editor for International Government. Ros, this is a Bloomberg scoop. It's a massive deal. Thank you so much for joining us. What does it actually mean for relations between the U.S. and Russia?
Well, of course, it comes after a series of ransomware attacks in recent weeks, some of which have targeted quite important U.S. infrastructure. And of course, the President, Joe Biden, went to Geneva to meet with the Russian president and gave him a list of 16 critical infrastructure areas that he said should not be touched. And he came out of that summit and he said, I spoke very sternly to the Russian president and I told him absolutely that these cyber attacks that are being conducted by actors on Russian soil need to be stopped and you need to rein them in. And of course, they've not been reined in and they're continuing. And so the latest revelation in our story that, of course, it's now extended to breaching the computers of the Republican National Convention, the RNC, last week is going to put further pressure on Biden after that summit to show that he's actually come away with something from that meeting and that he's not being pressured by Putin.
How difficult is, by the way, we should mention that Russia has denied this. So this is a report from Bloomberg, but Russia has said they had nothing to do with the cyber attacks. How difficult is it, Roz, to separate the Russian government from groups related to the Russian government from criminals that are operating on Russian soil. I mean, what is this exactly? Is it Cozy Bear or is it Moscow?
Well, this one seems to have been Cozy Bear, which is seen as a government outfit. And that, as you say, there are different groups there. There are criminal groups that are operating on Russian soil, utilising their base there to make attacks around the world. And then, of course, then there are ones that are really sort of linked very strongly to the Kremlin. Either way, though, the US administration's view and others is that, well, these groups would not be operating on Russian soil without some sort of tacit permission or understanding from the authorities there. And certainly the Russian government hasn't shown a great interest in trying to crack down on their activities. So while there are those degrees of different actors involved in this, and some are acting purely, it seems, for monetary gain, the problem that countries like the US have is that there's no visible effort by Moscow to curb their activities.
Ross, and also, of course, following the news out of the Pentagon that they've scrapped their deal with Microsoft, looks like they might split it with Amazon. Do we know what the driver is behind this, why they're reconsidering the contract?
Well, that's right. This contract has been mired in difficulty since 2019 when it was first given. Of course, it's a lot of money, $10 billion, and the idea is to unify all the Pentagon operations, including highly classified information, under one cloud operation to make it much more efficient on the battlefield. But because it's been drawn out in legal controversy, the allegations that the former president, Donald Trump, put undue influence on the outcome, the Pentagon's decided to scrap it and start again. And their argument, of course, is that 4 years later is a long time in technology. And so, in fact, what they were looking for back then from a cloud is different from what they're looking for now. And it makes sense to be more nimble and to renew it. But, of course, there was also the reality that this was going to stay caught up in litigation potentially for years to come. And it's really a message from the Pentagon. They want to get past that now and just move on.
Thank you so much. Our Bloomberg, of course, Rosalind Matheson, looking at all governments around the world. Now, later today, we speak exclusively with the Russian ambassador to the U.S. He's Anatoly Antonov. That's at 12 p.m. in New York, 5 p.m. in London. I know the other story, of course, that we've really wanted to talk about is Jeff Bezos. Man, I know when we came in, you were all over the story, and it's, of course, related to the Pentagon and the awarding potentially of something that they used to give to Microsoft, both Amazon and Microsoft.
Exactly. As Roz was just saying, this has a lot to do with the Jedi cloud contract that the Pentagon initially awarded to Microsoft solely, and now it's been scrapped. There's a new big, could be multi-billion-dollar contract that could go to Microsoft and Amazon. Of course, there are other competitors, but this boosted Amazon stock yesterday. Now Jeff Bezos is worth $211 billion, more money than any man, woman, or child has ever had. So he's not just the richest man right now, he's the richest man of all time. And it's, to me, you know, doubly fascinating because this is even after he split a portion of his wealth off to his ex-wife, Mackenzie. So if they were still together,
he's rich.
You have to imagine he'd be closer to 300.
Can I also point out that, of course, Mackenzie Scott's wealth increased because of this as well. It increased $2.9 billion. She's given away $2.7 billion this year. The billionaires here literally can't give money faster away than they're getting it.
I saw that line as well, but I don't think that's exactly true. She could give all of it to me in one fell swoop. They could give away money very quickly. Have you seen Brewster's Millions?
And Matt, sorry, wait, what are you doing with the millions? No. First of all, I mean, I find it incredible that, 4% gain in Amazon means that Jeff Bezos was $8.9 billion richer. But okay, so you get $200 billion. Matt, what do you do with it? Invest in treasuries, perhaps.
I have no idea. I would ask a lot of the smart people that we have on this program what to do and trust them with the money.
Right, there you go. $200 billion, where'd you put it? The $1 billion question of the week. We'll have plenty more, of course, on that story throughout today. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Matt Miller and Danny Berger. Katie Lyons is off today. Now, some developing news. Reports are saying that Japan is now considering declaring a new state of emergency in Tokyo, a move, Matt, that would likely mean that the Olympic Games would actually go ahead but would be held without spectators.
Right. I mean, we were pretty much there already in terms of the Olympics. It looked like they weren't going to let anybody in to watch. Most recently, except for VIPs. You got to assume that, you know, competitors, managers and teammates and maybe even family members will still be able to get in and watch. But for the most part, this is going to be an Olympics that you will see solely on television or hear on radio if you still get your news that way, as I do. But definitely not one that everyone's going to go and see.
Yeah, definitely. Tom Keene, a co-anchor of Bloomberg Surveillance, now joins us. Tom, there was a pretty big move actually in treasuries. The U.S. 10-year yield breached 2%. The 10-year was below 1.35, and that was exacerbated by some of the short moves on there, the short squeezes.
The market right now is absolutely extraordinary, Francine. To look back 6 months and think we would be here right here is unimaginable. Abby Joseph Cohen will join us from Goldman Sachs. Jim Caron will start us strong here in about 7 minutes with Morgan Stanley. Let's go to the chart. It's real simple, Francine. It's the inflation-adjusted yield, the residual, take the nominal 10-year yield, subtract out inflation guesstimates, and it is the duration, the length that we have had a negative yield. The pink line is a good moving average I use, and it is now down, breaching through to new negative levels. Just extraordinary to see the reversal in yields.
Yeah, and Tom, you have the perfect guest to talk about this.
Well, we do. I mean, Jim Caron's going to join, and that'll be good. And then Abby will come along on the equity markets. The Amazon news yesterday, I can't emphasize enough. The jump condition in Amazon of over 4%, what that does to the NASDAQ 100, with 3 stocks in the NASDAQ 100 making up 30% of the index. I don't believe I've ever said that, Francine. And we'll talk to Abby about being in the markets here at Dow 34,487.
Yeah, what a market day. Tom Keene, co-anchor of Bloomberg Surveillance, starting shortly. Now, this is what else we're watching today.
He can't quote the Dow. Pharaoh's back. Can't quote the Dow when Pharaoh's back, right? Will he allow that?
Right. I don't know. Tom, I don't know if Tom is still there to answer that. We'll have to get him on the phone later.
Tom must have gone.
Danny,
he must have gone.
You're watching Fed Minutes.
Yeah, I definitely am. And look, to kind of carry on what Tom was saying, we saw this absolute destruction of short positions on treasuries. And of course, the FOMC minutes come from a dramatic meeting, at least dramatic in terms of the market reaction. So what happens to these positions that so far it seems like the pain trade is still to see lower, to see yields continue to drop? Is that going to continue? Are they going to be hawkish? What does it mean for tapering? I mean, it is a dramatic day, and it could get even more dramatic depending on what we get out of the FOMC, Matt.
Yeah, well, especially as Tom points out, the real yield is down. We breached 1%. You can see it on the Bloomberg if you type USGGT 10Y index. We breached negative 1%. So that'll definitely be one to watch today. I'm watching Cozy Bear and this Russian, the new Russian hacking scandal. I find it absolutely fascinating because the Russian government apparently has an arm called Cozy Bear, which is a great name, regardless of what they do with it. And also the fact that they're able to hack into these, you know, we're on high alert in the U.S. in terms of cybersecurity. Every time you talk to someone who's close to the Pentagon, someone who's close to national security, they talk about cyber. So they're watching. Right. And nonetheless,
but Matt,
the Russians have been able to break through.
Yeah, so one of the things that we were talking about today is that if you have two groups actually attacking different things, so one goes after companies, and so I don't know how it works, but it feels like if you have a two-pronged attack from two different entities, that's maybe where you see the failings. I'm not an expert, but
they're flanking. You're saying they flanked the RNC, essentially.
Exactly. Matt, this is what I'm watching. What I'm watching is basically WISE. So this is a direct listing. This is one of the most fascinating ways to get into the markets because it's pretty unorthodox. and it's a digital payment provider. So Wise confirmed its plans to go public. It's happening today on the London Stock Exchange, but because it's opted for direct listing, that will test investors' appetite for this path forward, means that if they succeed, they could have other big companies do the same. I think we'll have more on that in like the next 5-6 minutes. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Of the world is vaccinated, so I think this reopening story is only just sort of beginning.
Businesses have been ready to reopen faster than workers have been ready to come back.
We've missed on inflation for so long that the Fed is really focused on achieving its inflation target.
Why would you still be bearish on supply? I mean, it's going to pick up eventually.
We're going to experience something that I don't think the markets are quite prepared for, and that is a potential contraction in personal incomes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Where did all the bond bears go? From New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio. Alongside Tom Keene, I'm Jonathan Farrow. Lisa Abramowitz is not in Crete. Joining us for the next several hours is Romain Bostic. Equity futures this morning up 6. We advanced a little more than 1/10% on the S&P, TK. Got to kick it off with the bond market this Wednesday morning. 30 south of 2, 10s at 134.
I think, John, we've got to remember Bond 101. We're going to do that with Jim Caron, but you really got to remember we're quoting yield because that's what the pros do. That's what we do on Bloomberg Surveillance. This this is about price. There is a bid price up on bonds, and then you saw the jump condition over to equities yesterday in the NASDAQ space. Absolutely original bond market this morning.
Tom, slice and dice the bond market with me. 10-year reals, negative 1%. That was a real yield move in yesterday's session. What's the significance of that?
The significance of this is absolutely profound. Three things make that up. The nominal yield, as you know, John, it's come down. We'll do that in the data check. The inflation expectation is gyrating a little bit up, and that gives you a residual that is ever more negative. But the other thing, John, that we're dealing with is the x-axis. The duration now of a negative yield is long. Swiss 20-year bonds flipped over to a negative yield last night. It's, again, the length here of negative yields, again, reasserting.
And for this equity market, Romain, it's not risk on, risk off. It's rotation on, rotation off.
Rotation back into growth. And you have to wonder whether this has actually changed the way, the belief, I guess, in that reflation trade, in inflation itself, and maybe in the trajectory of growth. A big reassessment that we saw play out not only in the bond market, but, of course, in the equity market.
Yeah, but Romain, you were living this in the close yesterday.
I live it
mean,
every
it was
day, Tom.
absolutely stunning. And there was Jedi, Microsoft, Amazon. And then, Romain, am I right? It got a life of its own about 2:30.
It did. You saw the bid come in, but what got the bid, Tom? You talk about where money goes. You talk about where price goes. It was back into the so-called growth stocks, but was that really a bet on growth, or was it more of a bet on safety right now? There are a lot of people reassessing basically what the narrative should be.
43.40 on S&P 500 futures. Let's whip through the price action this Wednesday morning. Good morning to you all. Equity futures up 6. We advanced by 0.13%. In the FX market, euro dollar's a snooze, 118.28. But there's the move, TK. 134.80 on 10s this morning.
Yeah, the 10-year yield, the nominal yield, 134.80. You got the 30-year bond 3 basis points under 2%. John, what I would talk about is this is so unexpected. And that what was the zeitgeist? January, February. It was the certitude of inflation higher at some level, some magnitude, and we've gotten the exact opposite. I like what Saravellos talks about here. George Saravellos publishing moments ago for Deutsche Bank. He talks about low R-starred. And he says, guess what? Price up in bonds, yield down.
Let's kick off the morning with Jim Karen at Morgan Stanley Investment Management, fixed income portfolio manager. Jim, let's go straight there. Number one question, the cyclical trade, the inflation trade, is this still on?
Well, good morning, and thanks for having me on your show. And I do think it's still on, but we have shifted down gears. So let me just kind of unpack this and go through this here a little bit. What we have to understand is that the delta, or the rate of change, is really what matters the most to bond investors. So in the first quarter, and even in parts of the second quarter, what we were seeing is rising growth, rising inflation, and an increase in policy easiness. Policy was getting easier. At this point, what the market is sensing is that we're past the peak. Growth is going to decelerate, inflation is likely to decelerate, and policy, we're past the peak in policy, and we're already starting to talk about ways to take that away. Now, that doesn't mean that the level of growth is bad. That doesn't mean that the level of inflation is too low, or that the level of policy easiness is that policy is too tight. But what it does mean is that we're past the peak. So essentially, the reflation trade that we're talking about is still going to be there. It's just going to take a bit longer to actually achieve these goals. So, for example, if we start to think about the more macro elements that make up the reflation trade, right? There are 3 of those. One is that you got higher 10-year yields. Then you got higher 10-year yields, or higher long-term yields, and a steepening of the curve, which is pretty rare in and of itself. And you also got a weaker dollar. So what happened is, when everybody got into the reflation trades, they were underweight treasuries, they had curve steepeners on, and they were short the dollar.
Right.
And now that the rate of change, or the pace of that move, is starting to decline, the second derivative, as they say, people are unwinding their short in the dollar, they're taking off their curve steepeners, and they're buying back their underweight in U.S. treasuries, and that's what's making this all happen.
Okay, Jim, brilliantly explained, but I want to let's talk some math here, folks. It is Math Wednesday here on Bloomberg Surveillance. Okay, you mentioned the delta. If I look at the convexity, and as Stephen Galley over at Nordea says today, it's a bear squeeze. Okay, fine. The delta's the first derivative. The gamma's the second derivative. Right now, are you observing a convexity trade that overshoots, and then we all climb back on the reflation trade? or is there some substance to this lower yield market that we're in now?
So I do think that there is a convexity component to this, and to the extent that you can overshoot lower. I do think that 10-year Treasury yields can get down to 1.2%, 1.25%. But I think, Tom, it's going to get hard to really get below that for any real material period of time, at least given what we know right now with the expectations for growth. I mean, growth this year is supposed to come in somewhere around 8% in the U.S. Next year, it's somewhere around 4.5%.
Right.
It's going to be hard for 10-year yields to stay as low, especially as the Fed starts to pull back and taper even a little bit. So I think this is a correction. The reflation trade is still with us, but it's going to take some time for these positions to get cleaned up.
Okay, Romaine, this is where you step in. If Lisa was here, she'd be talking the third derivative. Go at it.
Okay, all right. I'm going to stick with the first derivative for right now, and that it remains the Fed, Jim, here. And we talk about the messaging coming out of them. It seemed like a few weeks ago there was general consensus, at least the perception that there was consensus at the Fed here. It doesn't seem that's the case anymore here. And I'm wondering how you view the messaging coming out of the Fed and how the market's interpreting it.
So that's a great question, Romaine, because